You didn't show it, no. I figured that's what you had.
Daddy, 你觉得这是
Crystal, sign that. That was a brutal one.
Yeah, ace-8 hand.
Of course.
那你可以给我看。
Had to give some chips away at the beginning. You know, I haven't been here in a while.
I'm here with you now.
Brian, I didn't give you the lowdown. So usually, if you want it, you can top up at any time. But when you do, just put it into the Zoom chat. How much you do, if it's the full 1,000 or if you're from where you are, and then when we finish off, we just put what we're ending with in the Zoom chat as well, just so I can keep track.
And how do I add to the table?
If you click menu in the top left and then click add more chips, and then just make sure that it's you don't have the auto rebuy button clicked, okay?
Yep. Yeah, I don't have that.
Hey Luke, are we live by the way? Okay, so last week we did not have that many viewers, so this week I want us all to share the link here in Twitter so we can get some people watching, maybe some questions. So I just put it in the Zoom chat. You guys want to share the tweet?
I'm busy looking up how FDR served more than 2 terms.
Oh, they made a constitutional amendment, I believe, after that. The constitutional,
yeah, the 22nd amendment.
Yeah. Where's we got to get some of the Coin Center guys in here. Whenever I make a mistake on regulation or politics, they're always the one to correct me. I like those guys a lot. Peter Van Walkenburg, very sharp. Newridge is funny.
Yeah, the other funny thing, the other thing about Trump is, I think also Michael Cohen proposed this. He's saying that Trump is going to try to pardon himself before, if he loses, he's going to try to pardon himself before he leaves the office. But the other trick play that Trump's going to try to pull off is he's going to, after he loses the election to Biden, let's say, and he's about to leave the office after the inauguration, what Trump might do is he might resign, and then Mike Pence becomes, the next president for like a week or two. And then Mike Pence will then pardon Trump. So if Trump can't pardon himself, he'll get Mike Pence to pardon him. What do you guys think of that trick play?
It does seem very believable that part of the pressure on Trump to win re-election is pardons. I mean, a good chunk of his family is currently under criminal investigation, so that does seem pretty plausible.
That's just crazy. It's just I can't.
I don't know what mechanisms. Yeah, I don't know the dynamics of pardons, like in terms of whether he can pardon himself, but certainly his family.
But can you pardon himself for something that he hasn't been charged for yet?
That's the other question. Can you do a get out of jail free pass without having been indicted or without having been put in jail yet?
I find that hard to believe. Post fact, out of office, I don't know, maybe. I have a hard time believing he'll be pursued too much. I feel like people will do their best effort just to make it go away quietly.
I agree with that. He's going to kind of want to forget he ever existed.
Yep.
I don't know if it's forgettable.
No.
It took me 4 years.
It's so funny. My wife was saying to me the other night, she's like, God, you remember when we used to like laugh at George Bush?
It would be interesting. Richard Nixon was pardoned by Gerald Ford. It would be interesting if a Democrat was elected and pardoned Trump for national healing.
Oh, right.
This is a
be very interesting. I like that.
This is a very different political climate.
No kidding.
I put money that would not happen. I just can't wait to see his tax returns. What kind of dirt is in that?
Is it definitely being released?
I think the latest is that it's going to be released. It just might not be released within the election time.
In term, yeah.
Yeah, in time for the election. It's going to be some juicy stuff. Investigative reporting.
But I feel like we've continuously just had big leaks and just like nothing happens. Like Panama Papers was insane for a week or two. Nobody ever talks about it anymore. Nobody ever thinks about it anymore.
Mm-hmm.
White collar crime is just like brushed away. I don't know.
That is a society we live in. I agree. White collar crime does get brushed away.
So, Bobby, you asked before the game started what everyone's opinion is on sushi and what happened.
Well, yeah. So someone give the rundown on sushi and the sushi master chef. And I'd like to hear your.
I'll give the synopsis. So I guess it must have been 10 or 11 days ago. There was, as there has been, a new coin that was launched with the idea of yield farming it into existence, so staking other assets so that you can earn the new coin. And what they did was they suggested they were going to fork Uniswap and make a decentralized exchange similar to Uniswap. During the first 5 or 6 days, it was able to garner like I think 1.3 or 1.4 billion dollars worth of assets. And what was really interesting about how they did it was the assets that they required people to stake were the liquidity provider tokens from Uniswap. So at that point, midway through the week, they had about, I think, 73% of all of the liquidity that was on Uniswap, the largest exchange, decentralized exchange. They had them locked up, staking to earn. Then the anonymous founder decided to sell about $13 million worth of sushi that he was incrementally taking off of everyone's harvest and putting into a dev fund wallet. He then, of course, was extremely scrutinized for that. And then at that point, he seemed to willingly give the keys, the private keys over to Sam, the founder of FTX. And then from that point on, Sam went forward and facilitated a migration of over $800 million worth of liquidity that was in SushiSwap into the new SushiSwap decentralized exchange. And here we are on day 14 of the saga. That's the synopsis.
Well told. Well told.
Pessimistic view being once you dump 15 16 million worth, it's pretty easy to hand off the keys and walk away, especially when you're being at that level of scrutinized and potentially not anonymous anymore. So maybe not such a nice gesture.
Well, how much money did the keys control?
Well, they technically controlled the staking contracts that had $800 million in them.
But you can't steal those, so
Yeah, you can't take the liquidity provider tokens, right?
yeah.
But he did he give back some of the dev pool? He did, right? Or he was going to?
From what I was reading, I think there was something that was discovered after you gave the keys over to Sam, suggesting that they could have done something malicious with the liquidity provider tokens, although it would face the 48-hour time lock that was on there. So if you were to action it, there'd be 48 hours for anybody to pull their liquidity out once you took that action. So, but I'm interested, like, obviously, who's behind it? What a vampire attack on liquidity of Uniswap. What does simple forks mean for the space if it can take that much liquidity away from, and where does it show the loyalty of the community when it can take that much liquidity away from Uniswap? Like, there's so many kind of interesting pieces about it all.
Yeah, and more broadly, just the open source world, right? This isn't, well, we have the creator of one Bitcoin fork here. Right. So in an open source world, there's people trying to build businesses around it. So there's already Sashimi Swap and like 3 other Sushi Swap clones that are really just the same thing, not pretending. But hey, why not get a much higher yield of a brand new token? Yeah, question is, how do you build a moat? So broader question for all of DeFi is what prevents a single market leader or even Ethereum itself from basically just adding your protocol in as a feature? So the same way Ethereum is integrating ZK snarks, like what prevents Aave from just adding the code of Lend or of who's open source to basically make themselves a broader platform?
I mean, the bigger question too, Ari, is like, so I mean, all of this is some grand economic experiment. How can we incentivize people to provide liquidity? Because right now the small percentage you get for providing liquidity on the Uniswap platform is, you know, basically versus impermanent loss. It's maybe it's not worth it, right? So how do we incentivize people to provide liquidity to make these markets, to make this as liquid and interesting as centralized exchanges are? And right now the answer is we create something out of thin air that maybe people buy because it gives you more of that thing. Like, okay, we get kimchi, and if I then buy kimchi and farm additional kimchi, I'll get even more kimchi. But like, what is the value? So Yams has a DAO that's taking money off the rebase and putting in this DAO, and the DAO is going to do something interesting. But like, at the end of the day, why do any of these things? We want to incentivize people to provide liquidity, but why do any of these things matter at the moment, right? So it's a cool experiment. We're learning like a ton, both about general psychology and I guess the economics of incentivizing people. But at the end of the day, like what is the ultimate, like what does that look like at the end of all of this in terms of getting people to do it? What do they, you know, nobody's going to care about holding a kimchi or a yam if there's no bigger purpose. Why do they hold value? Why does anybody care other than it's new and interesting right now?
Well, a good example of that, Brian, and I totally agree with you, right? Like all those food coins and yam, there's no value, there's no purpose to them whatsoever. They're going to be all gone into the dust, and no one will remember them anymore. But Wi-Fi is a great example, right, of something that could have intrinsic value, because Wi-Fi, yes, you know, takes this approach of liquidity mining its token to its existence, which I actually think is a phenomenal way to fairly launch a new token. But it had an underlying product, and that product had a very real value to the same people that were interested in liquidity mining it in the first place, right? As an aggregator across different DeFi protocols. So right there is a fit that makes sense and has longevity, because by giving control over a protocol that they use every day and the value in that can maintain, you know, not this egregious level of return or yield, but at least some unique return versus other things in the market, you know, that's sticky. And like you said, we're learning a lot, and there's a lot to pull from it. But I couldn't agree with you.
I mean, aren't the concepts, maybe out of everybody here, I think other than my background, Ari probably would understand this too, is like the CME has very similar liquidity schemes. And if you kind of add the concept of the scarcity of their seats and the fact that you need to own seats plus shares, which gives you the right to certain incentives that the average retail person or a non-liquidity provider gains by basically the equivalent of staking those. It's one of the ways that it's probably the main way that like the Chicago Mercantile Exchange is as liquid as it is, and things like the S&P contract or like Eurodollar futures curves, things like that.
But that's not infinitely inflating, right? Like there's clearly a limited number of that.
Right. And value there, right? Like
that's how we set up our LPP for Hero. It is a very similar model to how the CME works.
So you could have something like, take Uniswap itself, right? You could be essentially farming something that is representative of some percentage of all of Uniswap's fees, somehow the inherent value of Uniswap, let's say. We have something that captures that, and that's basically what you're doing, but marking that price against like an ever-inflating emissions curve to continue to allow people to provide liquidity to get this yield, I think is is a trickier proposition. Like you're holding it to get some value and to generate fees, but this thing is
at some point it'll get past a critical point where it's just going to make more sense to get yourself out of the tokens and dump it, and then you're going to have like a big boom bust, aren't you? A big bubble, and it's going to pop.
Yeah, I mean, and you know, at some point, like, you know, the nature becomes the value. Let's say the value of the thing hits this sort of like critical value where it's potentially no longer worth it to have. Then people stop yield farming, which means they're pulling liquidity, which means the value then goes down because Uniswap has less liquidity, is generating less fees in general, or is less liquid, so it's less usable, and like that becomes its own like mini event that happens. But I mean, that's manageable, I guess. I'm more interested in what the end variant of this looks like. What can we give people forever that will continue to get people to sort of provide liquidity? I don't think there's a clear answer yet. At least
I think there's something to be said around having genuine input, the ability to give genuine input and control around protocols, right? Like this whole governance evolution, although very early, is starting to show those types of signs because, you know, there's something pretty special about getting in on the ground floor. Like imagine years go by and say there were to be a project that you participated on from the beginning, you helped influence the different things it created and the different value it brought to the market. Of course, as part of that governance and being an early holder, you've seen pretty significant financial gains. You know, that in itself is, I would say, a forever give, you know, but that's something that we're seeing happening at this.
I could see that locking in the earliest adopters, but after 1,000 people are owners, the next person owns 0.1%, 0.01%. I don't think they're not influencing governance. They're not. I think it would feel probably a lot like casting a vote at a national election. You don't feel like you're running the country as a voter because you know your vote is one of millions. So I'm not sure I buy. I think I'm pretty skeptical of on-chain governance. Here's like a really simple mental model. It works for very small groups of people, just like real-world governance, where people in a town can actually know the issues. They feel like they're governing the town. As you get broader, a more diverse group of people, larger number of people, as like the conclusion of kind of politics was we can't do direct democracy. The best we can do is kind of representative democracy. And in the US, we simplify it down to two parties, basically. That's like as indirect as you can possibly, right? The average voter can't be tasked with anything more than picking red or blue. Same's true, I think, for on-chain. You're not going to have 1 million people actively governing anything beyond a 3 multiple choice question once a year.
That's kind of how it's set up now with some of these, right? Is like I've seen at least a couple models where you're able to vote, but you're not able to necessarily propose things. So it's sort of, you know, the people who are running it, the devs or whatever, propose certain, you know, so I guess cast proposals, and then people vote on that, which really is ultimately they're just picking red or blue. It's just yes or no for each proposal that gets.
Yeah, so either you have almost no share of the vote, right, 0.01%, in which case I think most people would feel like their vote doesn't matter and they wouldn't bother voting, or you control so much of the vote that you're probably such an economic stakeholder that you would get your way anyway. Like you don't need, like if you actually own a quarter of all of those exchange coins, you're probably such a whale you could fork the chain yourself and implement whatever you wanted. So I don't know. I basically it's a question of broadly minority voting rights and like how valuable is having 0.5% of the vote in something? And I'm arguing almost not at all.
Well, and I can see that being the case for sure. I think the term governance gets skewed a bit in its current form. Like when I think about governance, I don't necessarily just think about voting power. I also think about, you know, some of the things like you even talked about it, I think, Ari, last time you were on here about how bullish you were on, you know, these robo hedge funds and these, you know, that model. You know, we're starting to see some of that stuff where token holders can participate in providing unique strategies to these protocols, and then based on their position and based on their input and value, they then have the capability to earn a percentage of those fees based on that strategy. So I think this is I agree. It's not just governance, because people are going to sit here and be like, yeah, I control this and I have X and I've made millions of dollars. Like, you lose interest. But I think you wrap that with some of the other intrinsic value that could be exchanged throughout the network, I think could be interesting.
Crystal, what are you drinking?
Rocket fuel. I am drinking it's called a cherry. It looks like wine, so that I look like I'm getting drunk. It's a tart cherry concentrate that is an antioxidant and anti-inflammatory, and it has sparkling water as well. I'm in this mode of having like new elixirs rather than alcohol every night.
What's that doing for you?
What's it doing for me? It's making me super strong.
All right.
Yeah.
I like it.
Lots of energy, lots of brain power going on. Yeah, I don't know. I feel like alcohol
as your background, Crystal. I thought we agreed that was the only background you were allowed.
Be right back.
Which one?
The Oval Office.
The Oval Office. Yeah. No, this is got some like live plant action. I'm in my little greenhouse here.
It's pretty cool.
Oxygen. I'm getting really tapped into this like body hacking thing, you know. Like we're all smart technology.
Virtual Burning Man last week.
Work on our hardware.
I saw you did Virtual Burning Man last week.
I did.
What was it?
I went to the burn in VR. I got to see my friends from around the world. We put the Quest on, Oculus Quest, and went and dropped into these worlds. Man, I like these weird bets. I'm gonna have to give it to you, Charlie.
Just
yeah, you know, I mean, with all these festivals canceled, people have redirected their creative energy into something else, and the amount of virtual worlds that have been created is mind-blowing. You can go, every year of Burning Man has been digitized, basically.
What are you talking about, the virtual worlds? Tell me more about that.
So inside of the Oculus, there are a few different games that you can drop into.
Which one? Yeah, which app are you?
Yeah, it's called
AltSpace.
AltSpace is probably the easiest to create in. It's kind of like the Minecraft of VR. And so all the different camps have put together their creative energy and started creating a virtual version of themselves. So you have like, you know, all these art cars and camps that you're used to seeing at the actual Burning Man. And the man actually burned on Saturday the way that it was supposed to. I got to go and hang out. I was with my brother and sister who live in California. I'm in Puerto Rico, and some friends from all different places in the world, Mexico, all over the US, you know, just dropping in, hanging out in our little avatars, chatting.
Mine just barely, if I can pull it out here, let me see. But just arrived today, so I've been very excited to try it out. So maybe I'll be joining some virtual world soon.
So I actually went outside. I went to the beach and put on the Quest so that I could stand in like nature and kind of feel like I was out there, and I tethered it to my phone, and it actually worked. But I'm sure I looked super crazy to everybody else.
I can only imagine people seeing you on the beach.
But there's a lot of space that way, you know. It is really weird because when you're dropped into another world for so long and then you come out and you're like, whoa, look at these white lights and these white walls, you know. At least nature is kind of a good buffer. Do you guys play VR? Have you gotten into any of the games?
I haven't yet.
I'll be setting mine up this evening, so I'll let you know tomorrow.
Yeah,
I'm excited.
My favorite is actually Beat Saber, which is lightsabers, and you get to like whack everything. It's really fun. I don't know. For me, in quarantine, the VR was my exercise. It was like everything for me.
Yeah, everybody has said Beat Saber is awesome. That was one that gets recommended all the time, so I'll definitely check it out.
Just make sure you you know, put the straps on. Like nobody likes to ever use the protection, but like you will throw those things.
Luca, I ask you this question every week. I'm going to continue asking.
What's up?
Are you a humble farmer yet?
Dude, I still haven't farmed. Last week I missed the chance. I really wanted to farm some Tron to get some sun. I think I might do it this week since Tron pulled back. So I might be a Tron farmer. But no, I haven't farmed anything.
The lowest of the low. I don't know what to tell you. Like,
Dude,
I don't know
just
if you're
wait. You just wait. Those farms are going to do very, very well over in the in the east.
I agree with that. What's your opinion, Luke, on the whole sushi fiasco? Like, you know, do you believe the theory about, oh, what a big win that is? Wow.
That's crazy.
I thought you might have that. That's why I didn't re-raise you all in.
Oh, hey, I like that you're at 555. You had the 5 pocket 5s.
I missed honestly most of the sushi stuff. I was out of town Friday through Monday at a buddy's lake house, so it's like you miss 3 or 4 days here, and it's like you miss the whole event. I don't know.
Well, the conspiracy was the CTO of Band Protocol was the master chef behind sushi. And
is he publicly known or not yet?
No,
if it is the CTO of Band, the CTO of Band is publicly known. He's an MIT grad, and
that's the overarching theory. And there's quite a bit of
even bigger theory is that Sam's back there pulling the puppet strings, trying to mess with Uniswap. But
that's the other one. Well, I don't know what to say. It's pretty wild that Sam was like the largest holder of sushi, $30-40 million, and then ends up getting the keys given to him within a few days.
And somebody said they graduated MIT same year as well, I think.
They did. The CTO of Band and Sam graduated MIT same year. And Band Protocol was, you know, there's a lot of things that happened with Band and being part of the farm and people, you know, the team tweeting about certain stuff. And
that guy's Twitter feed was basically like just positive sushi retweets.
I don't know what they think though. I don't know what.
Everyone's calling.
Be really annoyed if you show a hand I should have bluffed you off of. I don't know. No, okay. Whew. You're not laying that down.
I didn't think I was getting anything else out, but I thought you might bluff it.
You guys are all too good.
I thought about bluffing if I thought I was up against 2 pair. I might have tried to bluff like 2 pair off. That's really the only hand that. It's either that or I win with a busted draw. Against a busted draw, I mean.
Bust draw is a little bit worrisome.
Brian, was the last time you made a heads up poker run?
God,
wasn't that your game?
Yeah, I would have to check like 20 I'm trying to think of the 2014 maybe. It's been a long
Oh,
time.
wow.
I was actually, they were gonna have a big event this year, so I haven't gone and played the WSOP in like a long time, many years. And I was gonna go. They were gonna up the Heads Up event to 25K this year, and I really wanted to go out just to like try to relive some glory days. But COVID happened, and I completely skipped. You know, they played it online, but I didn't play it all.
Yeah.
But no, it's been a while. I do. There's something about the WSOP, something about tournaments, heads up tournaments, all of it is it's just so much fun.
Sure.
Well, how many did you, or how long did you play in those tournaments, Brian?
From age 21, like 5 years basically, 21 to 25-ish. Yeah, I would say something like that, where I would go out in the summer with a bunch of friends, and yeah.
I feel like I hear that a lot from people that used to play a lot of poker. They're like, yeah, you know, my mid-20s, like I was a pro, or I did this, and I played a lot, and you know, over
Yeah,
time,
I mean, it's just like if you were a young kid who came up in that generation, right? There's just a bunch of us who were like 15 to 20 years old who made a bunch of money really fast playing online, and then finally turned 21, and like this was the time when WSOP was just like on TV all the time, and it was this huge thing. And so, you know, all of us would just go out there, and it was awesome. For a couple of years, it was great. After, you know, poker got banned in the States in 2011, and then it became a lot less enjoyable after that. I would say the whole dynamic of the community got like a lot different. But no, it was awesome.
You think we'll ever see legal online poker in the U.S. legalized?
Yeah, I think we're already well on the way, and I think the fact that that sports betting is seemingly a near given at this point, that it's going to be one after the other. But they're certainly stubborn. The fact that all the pools are still largely segregated, or like a bunch of them are, it's just a nightmare. The amount of bureaucracy and all of that stuff is just insane. Oh man, Gunny, my phone just spoilered me here.
Oh no.
Got a sweet fantasy update, but my stream is behind. So all right.
Wait, let me. Where are you following it? On Sleeper?
I just picked up my phone and Sleeper said it. I mean, unless it got, I don't think it can be right. I think it must have got pulled back. Because I got a thing that was like Mahomes touchdown, and then I looked, and Mahomes still has like 1 fantasy point. So.
Oh, yeah, I'm seeing he's got less than 1.92 right now.
Yeah.
That you're saying same? Yeah. Right.
Yeah. But it did. It gave me the full notification of a touchdown. So it was just a troll, I guess.
What's amazing is I have Watson, you have Johnson. You got the running back.
Yep.
Oh, yeah, but I got Fuller. All right.
So Ari, with this explosion of DeFi, how has that changed? You know, how as a crypto native fund you look at allocating capital? Has it changed much?
Hasn't changed really anything for us. We've never lent out crypto. as a kind of categorically. And earlier this year, I was thinking, okay, maybe the lending platforms are a little more mature. Maybe we can kind of underwrite them. Maybe basically in 2017, I was very happy with that decision. It's like, oh, it's time to revisit. We were already kind of doing that when DeFi came along. Basically, the question of very simply, is the yield that we would be getting kind of worth the risk we're taking, right? Just that. I think it's worth really differentiating. There's like the speculation of trying to hop in. There's the trade of staking in DeFi to earn a 200% annualized return for 4 days or whatever. I'm not saying that's not a good trade. The conclusion was basically we still don't like lending out our assets. We still think the risk-adjusted returns are not there. Basically, crypto as a whole underprices risk systematically. With that said, we have invested in DeFi. We've just done it not by kind of systematically lending out, not by just kind of blindly saying like, let's put our capital to work, but rather on specific investments and trades. I definitely think real value is being created there. As Brian, all the questions Brian asked, I'm still asking myself. It's not clear to me where the eventual value will be, what the moats will be based on, but genuine value being created. We've bet on kind of the teams we think are the strongest. I don't know if that really answered the question. I think it's going to be it.
Well, you did. You're pretty much, and correct me if I'm wrong. You're pretty much saying, we're placing bets. We're placing bets on people rather than, chasing after some crazy yields and trying to, you know what I mean, ride that way.
Yeah, it's also just a different way of thinking about it in the sense of, again, like if you're staking as part of a trade and you've thought about, okay, for the next 4 days, I'm getting this hyper yield because there's this massive mission curve, and it doesn't matter if the token's going to exist in 2 years, I can then, sell that token on an exchange. That can be a smart trade and certainly has been for a lot of people. I guess the word of caution I'm trying to offer is just, there's a lot of people, like I've seen people refer to it as risk-free a lot, which is so comical. It's like, how many times do you need to see these DeFi smart contracts get exploited before you realize there's risk? I'm not saying it's not
a risk-free rug pull, right?
Yeah.
Well, there's a rug pull, but even aside from the rug pull, just things like the flash loan attack that happened in, what was it, like early March, using 5 separate DeFi platforms. It used like DXDY, Uniswap, Balancer, like, that's going to keep happening. We know it's going to keep happening. And you might get great risk-adjusted returns, but don't think of it as like, it's not a yield on your money. It's like, and similarly, if you make a loan on any of the high-quality platforms, a platform like BlockFi, who I'm not in any way disparaging, if you make a loan on their platform, you're not earning a return on your Bitcoin. You're earning a return for lending money to a risky crypto startup. Because your loan is not directly one-to-one collateralized. You don't know what the collateral is posted behind it. I don't mean to single out BlockFi. That's true of every lending platform. So like from my perspective, I'm going to lend money to a risky crypto startup. I want a lot more than 10%. I probably want 25% returns, 20% at least. But I don't mean to be a naysayer. There's like everything in crypto, there's excess, right? So there's a lot of good ideas and there's a lot of great experimentation and risk taking. And it goes a lot too far, as it always does in crypto and in any new tech industry.
Yeah, I agree with Ari. I think, especially the lending stuff, the rates are ridiculous. There's too much crypto money chasing not enough good deals. So I think people are going to be in a lot of hurt in a few years after the dust settles. So, put another way, I'm putting my money where my mouth is, which is I don't lend out my crypto, period. Basically, if you think about it, another comment is if you hold crypto, you're fundamentally long and bullish about crypto prices. And by lending it out, you're actually shooting yourselves in the foot, because if crypto behaves what you expect it to behave, which is to go up through the moon, then the chances are higher that you're not going to get that loan returned to you, right? So it's kind of like, why would you do that? Why would you bet on crypto and then lend it out for the small yield? It's just ridiculous.
I think there's some interesting things with that being said, and it all comes down to risk tolerance. But I know quite a few folks that will leverage positions that they have that they're very long on, right? Let's just use Ethereum as an example. So say you're very long Ethereum, they'll go and they'll lend it out at a very reasonable collateralization rate, right? They'll lend it out at like 200 to 1, so it's very little risk of them being liquidated or whatever it may be. just to get stable coins, so they can then use those stable coins to participate in some other market. That could be farming, that could be participating in, you know, an early stage investment in a crypto asset or something. So, you know, it speaks to your ability to leverage your assets for getting more capital, not unsimilar to, you know, being able to get a line of credit against your home or things along those lines, you know? So there's most certainly value there based on your risk tolerance, you know, and what you want to do in the short term, especially if you want to stay long, which I'm in the same boat as you on that.
But part of it depends on what you're doing it to, right? Like there's different kinds of risk. Like we're talking about the risk of being liquidated. So like, you know, are you going to get liquidated at 200 to 1? Like probably not, but there's these other risks of like whether it's an exploit in the contract where, assuming there's something decentralized, where something can happen to these liquidity provision tokens that are being put up, where somebody can potentially basically drain those, or whether it's you know, essentially just messing with this platform so that you do get liquidated in the platform sense, even though you don't in like a true and fair sense, in terms of what actual price balance was. So there's all this added risk of like, is the code sound, and have we thought through all the corner cases? And given that half of the stuff that $1 billion+ is being locked into is unaudited, the answer is probably not. But you know, I guess we'll see when it happens.
Yeah, I think it's a little similar to people talking about leaving a lot of money on exchange, where it's like, well, what are the odds that whatever Binance or Bittrex or Poloniex won't exist tomorrow? But it's like, how many exchange failures have we seen? Right? We've seen a chunk of all Bitcoin in existence get stolen from Gox. You know, every year there's a long series of failures. Doesn't mean it's dumb to have money on exchange. I do to trade, but I think people just systematically underestimate the risk, is what it comes down. And in lending, you're competing with those people for rates on your loans. So you're generally not getting a great rate because you got a lot of people who price that risk very low. The yield farming is very different because they're airdropping a new token. That's like a different dynamic. There you're kind of taking advantage of, just especially until recently, there weren't many people who you were competing against, right? How many people were yield farming sushi, you know, in its first 4 days? So you could argue that there's, you know, was meaningful edge just from being technically savvy enough to scoop up free tokens.
Yeah, I mean, there was still like Yams, right? It was like $500 million within the first couple of hours. So it's not that there's not like a trivial amount of capital being deployed to it. I think it's just that people are fundamentally mispricing what that value of that token will converge to long term. Like, you know, there's why does Yams have that insane market cap? Why, you know what I mean? So it does seem like there are a lot of participants, but it was just so wildly mispriced early on, and what the value of those tokens actually would be. And Yams had the, you know, additional feature of rebasing, and which people also act pretty terribly around. Yeah.
Ampleforth was amazing. Like it's
still
such
is.
a simple mechanism. Like it's not that complex. It's a pretty simple mechanism. And I would think like Ampleforth is not a household name, and it wasn't really, I don't think it was marketed in like there was no public marketing for it. It was only marketed to the crypto native crowds. You would think people who've been in crypto for a while and are looking to gamble with shitcoins would know enough to read the first 2 sentences of how it works. I don't know. It's pretty.
But somehow every tweet I saw was that the rebasing event was this like crazy thing, and you're going to make a ton of money and lose a ton of money. And it's like, I don't know. It's rebate. You still own the exact same percentage. Nothing has happened, but the chart looks funky and people love it. So,
well, you know what was rebasing, what's really cool about it is everyone plays by the same rules, and the rules are built into the protocol, and it almost builds a game within the token, right? And that's what's interesting about it. You know, and of course, I don't necessarily agree at all that it should be tied to something stable. I think there's much more validity in an elastic supply mechanism for something tied to something or pegged to something that's volatile in its own right. It makes the game even better and bigger, and that's even more fun.
But that's what it is ultimately, right? It's a game. It's something, you know. There's nothing actually happening. It's just how many people are going to misinterpret this or do it badly. And, you know, now some of the efficiency is getting sucked out there. There's all these studies around people arbing the sides of the rebasing kind of things that you can do there. But like, it's it's really like how many mistakes can we get people to make, and so it's a wealth transfer mechanism. It's fun, it's cool. I love, I came up playing these kind of games. I love that kind of game, but it is at its core, it's a game. But I do love there's these other random coin like Most and some of these others where it's like they do the opposite and say they're based on the U.S. Treasury system. So, when the price is below, they're going to inflate. When the price is above, it's going to deflate, and it will still converge to $1. Was their grand theory. But it's fun to see people play with these ideas, and so many other people severely misunderstand them.
The second
Hey,
pump on.
speaking-
Go ahead, Crystal.
Exchanges. Have you guys been tracking what's going on with BitThumb, with the raids?
The raid today.
Yeah, well, this is the second one, and they've had indictments.
Was it
Just the
confirmed to be
headlines.
kimchi related? Yeah, the same here, just the headlines.
Not sure, but I mean, they're the biggest.
Today was Gate. Today was Gate, not
Oh yeah, that's right, Gate.
BitThumb did have two. Crystal's right. I thought part of it was BitThumb. I don't want to say something negative that might be wrong, but I'm pretty sure that part of it was they were already under investigation, that investors had sued them or filed police reports that they had raised money for an exchange coin that they weren't launching. So there was an element of they had pissed off an investor base. But it wasn't anything generally anti-crypto. It was specifically investigation into BitThumb for a series of possible wrongdoing.
So they wanted to be the new BNB.
I believe so.
Yeah, I remember when this token was starting the feed. It was like end of 18, I think. It was called BXA. And it was right after BitThumb sold for $300 million to this other wealthy group, but there was some ties with the previous founders, and there was a bunch of stuff going on. But essentially, it was like this exchange network token called BNB, right, Crystal? Copycat, trying to ride that wave, and they raised hundreds of millions. I remember they were on Bank of the Future, and they did a bunch of stuff, and heard about it soon.
Fuck.
That's such a tough hand.
Ugh.
Oh, that ate him.
Wow.
It made it worse, although he didn't need it.
Good hand, Brian.
Thanks, buddy.
Fuck.
It's pretty easy when you just flop a set against an overpair. So.
Fuck yeah. Against kings, man.
That's a big thing today. I hit 2. Crystal hit with her. No, Charlie hit with his. I think Crystal did as well on a hand.
We'll see how much further DeFi farming spreads. So every angle of crypto is trying to tap into that to get quick liquidity. So there's I don't know if it's launched yet, but NFT liquidity mining. That seems to be a very fast growing space generally, NFTs. But a lot of projects, there's a project that I had personally invested in before Block Tower called Storm that is kind of like Lolly or Fold. They're a rewards, crypto rewards point kind of company, and they're looking at having some element of yield farming in their token economics. So every type of project in crypto is seeing the success of the compounds of the world and curves and saying, what can we copy here? And all of that will be competing for the same kind of general pool of money sloshing around with liquidity.
I like that. Storm is a good project because it's a consumer-facing, very friendly, accessible crypto project. You buy things online already, you earn some tokens for doing that. If they're also adding yield farming on the back end, it's now you have both sides of the equation. So
Aren't they more it's more like earn-based economy type stuff, right?
yeah, you play games and you
Play
buy
games for
They're sunsetting that though. They're sunsetting. They're focusing on the Lolly product, called Lolly competitor.
They kind of pivoted, or they wrapped in. God, I'm forgetting the names of it. The kind of earn tokens by working is now folded in on and partly deprecated.
That was
But they've had massive growth. I just caught up with the CEO, and they've had really great growth, just exponential growth in users over the last quarter, 2 quarters.
Simon's awesome, man. He's
great, man.
Yeah.
I love that guy. Yeah.
Oh my gosh, I don't like Simon at all. He took like a $1,500 pot or even more. What is it, like 2,500?
Oh, that's right. I forgot that he was on here. I totally blanked that he was. He played, I think, last time I played. I totally forgot that you guys knew him.
Well, I think you can tell a good CEO based on their poker skills.
Maybe. I'd say I don't know him super well, but I invested in them personally a few years ago, so I've stayed in touch, and seems like a good guy overall and a good CEO and well-intentioned. And aside from having some skin in the game with him, that's the kind of project you want to see succeed in crypto. One that's just kind of grinding, building.
Yeah, it started with that small check from Bill and just built, and I do like Simon a lot. I was actually more excited originally about this kind of work and get exposure to crypto, kind of the interface, like basically just a layer on top of Fiverr or something similar, right? Where like rather than earning dollars, like you can get exposure to this new thing and like bringing new people in the ecosystem. That to me seemed really cool. I wish that would have gotten legs and become something, but yeah.
You know, it poses a unique opportunity, right? So you look at what Storm did in September, October of 17. They took advantage of what was happening in the market with the IPO craze, and they were able to, you know what I mean, accelerate their project and raise some capital and do what they needed to do then. You know, there's these type of unique opportunities right now where if people with good intention, with sound business and sound business models can help accelerate user growth and in turn revenue for their company by leveraging what's happening now in the mindset of crypto investors, like that can go a really long way. Like, and when Simon was playing with us a few weeks ago, I said to him, you know, I'm not sure what the answer is, but I know for certain there's a way to leverage yield farming in this craze to help drive users that actually put dollars into the business's pocket. And you know, not for nothing, you know, you mentioned it already, like comp, you know, gets the good side and the bad side of it, right? People say, oh, what are they governing? It was a protocol that raised money from VCs and all that type of stuff. But they used what they had, which was a token, to incentivize people to participate on their platform, which in turn bring money to their business. You land on our platform or you borrow on our platform, we'll give you this token. And that is something that's kind of been part of the ecosystem for a long time, but we haven't seen it in action at scale because, you know, the ecosystem is too mature. But I think we're going to see some solid companies be able to take advantage of that in this little ride.
Are you saying I should all in sashimi? Should I buy some of that?
I think that's what he said.
I thought I heard him say hero. I wasn't quite sure. But...
Yeah, it's tough to hear. You cut out for 1 second.
You should have, man. But yeah.
Sashimi is supposedly by the Elf crew.
Jesus fucking Christ, that thing went bonkers. Yeah.
Yeah, it did go bonkers. And I have like I have signals on like a large swaps on Uniswap, and like all day, all I saw today was
sashimi.
Elf to eat. Elf to eat, Elf to USDC. Like people dumping these Elf bags that they've had since 17, just dumping. Just crazy.
It's honestly more advantageous now to know what's going to be added to a farming pool than to an exchange in a lot of ways. I mean, it's really what drove like the second Ample push towards $2. Got added to one of those pools and it just rips higher. Same thing.
I love the Uniswap ecosystem is so interesting. Like, I laughed the other day. I think my favorite thing I saw was that there were these bots that got ran that anytime something new got added to Uniswap, it would just like buy, you know, half an ETH of it or whatever, right? Just literally anytime anything new, it would just buy, and everything was going up, so they were crushing. And then there's the other guy who made a bot who would just launch a project every 4 hours and wait for those bots to buy it and then just rug pull basically just over and over again. It was like just punishing that bot, like this ecosystem of like pure insanity where like somebody's going to write a bot to buy anything that gets listed, and another guy just has something like every 4 hours like, oh, here's a project for you, just like honeypotting them over and over again. The whole thing is just insane. It's wild.
It's what the world would look like if it were just all AI.
Yes, probably would.
I mean, it's like it's just trading. It's the fucking game. It's the game within the game. It's all like you trade, like when you traded level 2 in stocks, like you could spend hours just like walking algos up and getting them to just like they're on like pegged bids, and you just walk them up, pull bid, walk them up, and then turn and hit them for everything they have it go, have the price reset, and then do it again. And you could spend hours doing that.
Luke, I didn't think you had much. I didn't have much, but I'm lucky I didn't raise, because you would have called me there. Then I would have been so bamboozled on the river.
Yeah, I figured it was a really shitty spot for both of us, so it was like the only way out for me was to bet and hope you fold. Neither of us had the ace.
I was gonna raise you to represent the ace because I checked the flop. Because I was gonna raise the flop, and I was like, let me pretend to have the ace. But I think with the flush draw, you would have called it.
I want to say I would have folded, but I probably would have called you, right?
Yeah, I think no one knew you would have.
Bad habit.
Oh, reload.
Wowee.
Kings get you on 2 hands there, Gunny.
I know, man.
Wait, would my 7-3 offsuit have won that hand? Damn it.
Wait, where do I get more money?
Krista, you got to start playing that every time, though.
It's menu in the top left, Gunny. I've been there many times already this game.
Do we have anything happening for our 7-2s, or?
We still don't have a 7-2 pool. We could do that. You'd start farming 7-2s. If someone launches a 7-2 token, we could.
NFT, yeah, Ari was talking about that earlier. And NFT farming will be interesting. It's kind of like, originally you had CryptoKitties, and there was this breeding mechanism where there's, I don't know how exactly they're all structuring it right now, but if it's some sort of randomized rarity incentive or like something happening in there where you just farm more to try to get one of these, some style of reward that you're looking for or something, I could see that being an interesting mechanic in the right ecosystem that sort of captures some people.
CryptoKitties got a little bit weird. I mean, I spent one night kind of binge purchasing CryptoKitties when they first came out, and then had to go through the whole process. You have to breed them. You have to buy 2 cats, breed them. They spawn another cat. But then you have to sort of put them on the market. And I felt like I was like trying to find somebody to mate with me. And it's a little bit strange. I'm like, come breed with my cat. I'm posting ads for it on Twitter. I'm like, maybe my cat needs to be on Tinder. I don't know. It just started to get a little bit strange after a while.
So what happened to your cats, Crystal?
I don't know. Some of them, I gave away a lot of them. We did some sort of challenges at a conference, and I just gave them away. Nobody bought my cats because it was an oversaturated market. Everybody was just buying the kitties and breeding the kitties, and all of a sudden you just have all this spawn happening and just too much supply.
I see. So they just sort of get shelved in perpetuity.
Excuse me.
They don't die, do they? They just stay sort of frozen in time, right?
Catalog, and then you have them in a wallet. You don't really have them exposed anywhere. It's just the website.
We'll say they're Schrodinger's kitties for now. It's they're not, maybe they're not dead, probably not dead, but we don't know. We're probably never checking them again because.
Yeah, I mean, I think.
Do you guys think NFTs? Yeah, go ahead, Crystal.
I just think it's the NFTs need a place to live, and that doesn't exist right now. And, they're just still disparate. They're inside of wallets. They're inside of different worlds, but there's not really a good spot for them to live.
Yeah, it's interesting what that will look like, right? Like you have a bunch of physical games, whether it's board games, Magic the Gathering, all of these things have moved now to heavily being online, or at least like trying to equally be online. And so that's all driven around competition. That's fun thing. Hearthstone, the success of all these other games online have their own thing. That's essentially the equivalent. There's some rarity. You can trade it within that locked ecosystem. In some games you can sell them, some games you can't. And so the question is, just owning something rare is not that interesting. Even now sports cards and all these other memorabilia are trying to do digitized versions of kind of your portfolios, a bunch of vaults doing that. But yeah, it needs something. There needs to be some draw of what you're doing, and whether that's a game or an ecosystem to show them off, I don't know what it's going to be, but right now it's just, yeah, it's like CryptoKitties. It's the first couple were rare because there's only so many, and there's a couple cool permutations, but then it was just like endlessly inflating, and you can't do anything but sell them to somebody else. So,
and it's segregated to like one platform. So maybe if there were NFT marketplaces, but that is still not that compelling. Nobody's really going out shopping for NFTs just to shove them in a wallet that you can't see. So until we have a social network or even a messenger, we've been thinking about putting them into Sense Chat as a sticker. You can just import your NFTs, use them as a sticker, and if you want to sell that in chat, it's an interesting business. Like Line Messenger makes $20 million a month off of sticker sales, and they're non-unique items. So I think if someone can figure out what that formula is, we'll find NFTs have an actual life cycle. But right now, I just don't feel like they're there yet. Yeah, my kitties didn't get a whole lot of action.
Except the breeding kind.
One company that's actually done pretty well with that is Rally Road, and they're not as I know the founders are interested in crypto. They don't do anything NFT or crypto specific, but they sell partial and digital ownership in like rare cars and sports memorabilia and just really rare items, scarce items, and then they ship you like really cool stock certificates. So you have something to show for it. If you have like $10,000 of one of the nicest Porsches in the world, but you kind of don't have the Porsche. So there's unique ways to do it. I think even outside of crypto, it's going to take a while to figure that out.
Yeah, Rally has been interesting to watch. They've really been fortunate to have this massive sort of like card renaissance happening right now, and they've thrown on with wine and all these other things that they're doing. But there's so much stuff spinning up around that space that they could do really well. It's an interesting model itself for sure. And it's good for them because it like keeps it within their ecosystem, right? Like everybody has a fractional share of this, so nobody takes sort of ownership of that thing. It sits within their ecosystem to potentially be sold off later on, right? That's how it works.
Yeah, they have an open market. It's almost like an exchange in their app. Their assets have done well too. I mean, they're all performing really, really well. So at least last time I checked.
Oh yeah, that's right. They do some kind of like IPO, and that's where everyone gets the initial shares, and then they can trade their individual shares.
Exactly. Yeah, they have it's almost like an ICO, and then they have their initial listing of a Porsche or a pair of Michael Jordan shoes, and then I think I forget the exact time period. Like a month or two later, they open up the auction, and it's either a private buyer comes in and offers a massive allocation, you can sell to him, or what they've seen is like a lot of people are actually holding. Like most people are treating it like a 2, 3, 4, 5 year bet, which is pretty cool.
Does anything force convergence? Like, what if the price of $1 million Aston Martin gets bid up to 5 million? Is there any? Can the people who hold that, or no? I guess it's more the other scenario that matters more. Let's say that $1 million Aston Martin's trading at 200K. You can't, as an individual, find every share. Like, are you still able to take possession of the car? Like, I can imagine you could have something like if 70% of the equity holders or 80% want Rally Road to actually sell the car, they have to. Something like that. The equivalent of a equity buyback, where if you get a certain percentage of shares, you get them all.
Yeah, that would be really interesting. Like the other shareholders are forced to convert if you own a certain percentage of it. Yeah.
Because I feel like without that conversion mechanism, I don't feel like you really own the thing. So this is actually an issue for like like some exchange traded notes, like with GBTC or ETH, a challenge is that there's nothing that really forces conversion of the ETN back to its underlying NAV. If it was trading at a 90% discount to NAV, there's nothing that causes it to ever revert. Basically, Grayscale can liquidate the ETN and shut it down forever. And if they do that, then the underlying asset, the Bitcoin or the ETH, gets distributed or sold. But they have a huge incentive not to do that, right? Because then they're collecting management fees on that NAV. So potentially you could be buying those ETNs at a 40% discount and they could just stay there for 20 years. So I feel like you really need some conversion mechanism, even if it only kicks in at a really extreme event, to feel like what you own actually represents the underlying. In this case, like that the Aston Martin equity you own actually is a share of a car. I don't know. I am vaguely aware of Rally Road, but I don't know their mechanisms.
I actually feel like I asked him that. I had him on the show. It was like last year, though. It was a year ago. I think they ran into a situation like that, but it's been so advantageous when they find a private buyer who wants to buy the entire asset that I think enough people convert. And then I also know that they're usually, the owners themselves are investors in most of them. So I think I don't know if they do a percent. I don't want to misspeak, but I'm going to ask him. So I'm pretty curious.
They don't seem to have much on the website. They really push you to download the app.
Yeah,
I was just talking to Jeremy, who's heavily involved with them. I'll text him and see if I can get an answer.
Okay, Queen's there, brother.
Did you? I flopped top 2. Ace King.
Here's Ace King suited.
No, not suited. Got a little loose in there. It happens.
Dude.
You know.
I'm on to you.
Look, I'm behind one buy on the night. I got to start throwing some action out there. Hopefully he comes back.
It worked.
I think the most interesting part of that app is how well Porsches have done over the past 20 years. Almost every single year, I think they've had one down year in 20 years. Some of the rare, not just a random Porsche you buy, but it's pretty nuts. Alternative
There's
assets.
a lot of things like that. I started with all this craze that happened. I started looking into cards, and somebody told me the stat Magic has appreciated 20% compounding year over year every single year since inception. I think there's I'm not sure that we can necessarily project that forward, it's there's a couple of classes that were just underlooked for a while and have crushed. You're muted, Ari. I think you're saying something probably interesting.
Thank you. I just read through the Rally Road website. I found they did have a spot talking about the investment. So what you own is actually equity in a company, and they create a separate company. Probably do so, or at least you can hope they will.
Yeah.
Yeah, I got a similar response. He doesn't think there's a conversion mechanism, so that makes sense.
Chris, what could I have bet there that you stay around when you had Queen? Maybe I just check it.
Yeah, with that check, right? I figured you had something, and there was probably 3, maybe 4 hands you would have had pre-flop to, Ari raised. I tripled Ari's raise, and then you doubled my raise.
Yeah.
So I'm thinking. You're sitting there with ace, king, aces, kings, maybe something else, just a little less than that. And when the ace, king came,
I know it's I hit that so much that it's really hard to rep anything else. Maybe I'll start mixing in 7-2s on my 4 bets.
What'd you have there, Chris? I'll tell you what I had.
Did you think I had? I'll tell you what I had regardless, but I'm interested to see. If
I folded a pretty strong hand. I folded 10 queen. I just don't think you're raising. I mean, the only thing I could hope you have, I think, is like maybe a spade draw, like ace king of spades or something, maybe raise there. But I think I look pretty. You had what?
Ace 10.
Okay, that'd be. I mean, that's like a pretty typical. So yeah, with 10 queen, I'm beat by any hand. I think where you can like legitimately think you have the best hand there.
Mm-hmm.
I don't think you play ace with middle pair there, and you raised in earliest position. So
yeah, like it was. I put a little pressure on you there, just to.
I wasn't losing any more. If you call there, I check the turn. Maybe I call that raise on the river as a bet. You know what I mean? Like maybe you could have gotten a little more out of me, but I was going to check the river.
Yeah, really thinking back, like raising you there, I don't even know if that's really a good play because you're really calling me if you have two pair of trips, right? Because there's really nothing else. Maybe king 10, but that wouldn't be something you would do. That'd probably be.
It potentially buys you a free card on the river in situations where you want it.
Mm-hmm.
So like if I have two pair or a set or something, maybe I call and look to check raise the river and you get to check behind, or if a scare card like a king comes where you really don't want more money going in probably. So I don't know. I don't think it was a bad raise.
Well, you escaped my wrath again, so.
No, yeah, you took a decent pot off me there.
Oh, for sure. I'm just bugging. I'll give it a good, Charlie. My Jack 5 is no good.
You need more of a poker face, Charlie. Might as well have king in your background there.
Really? I actually want him to fold.
What else interesting is happening in crypto?
I feel like all anybody's talking about all the time is this DeFi and yield farming. It's just crazy, man. Nuts.
I'm trying to start thinking about the election as relates to markets. To me, there's no like clear trade, except I think there's a lot of volatility around the election in the macro world, and Bitcoin's been following gold pretty closely, and equities to a lesser degree. But I actually don't know. Like, I assume the most bearish outcome is uncertainty. That basically, if it's the day after election and we're not sure who the president is, that's probably bad for equities and bad for Bitcoin. I'm assuming that Trump being elected is better for equity short term, and Bitcoin rallies on that. But you can make other arguments that it's been Democrats pushing for more stimulus directly to consumers, and that would be bullish equities.
You know, it's funny because that's all I was thinking about in May, June, like what my play is going into the election. I feel like everyone was talking about that. Oh, I think we're good for the summer, but we're going to reevaluate come September. And I feel like so many people, including myself, like forgot about that, that position. It's, yeah, and we saw a little glimpse of it this last week, right? So equity markets took a big hit, and unsurprisingly, Bitcoin followed, and then DeFi tokens just got massacred, right? Like classic, the majors fall a little bit, ETH falls a little bit less, Bitcoin falls the least, all the altcoins get crushed. So give us a glimpse, things haven't changed. It's just the same thing,
no.
Just a different story.
This entire last 6 months has really reminded me of how right you can be about something and still get pretty crushed, right? Like I was like, in terms of the virus, I was real early on it, and I thought things were going to tank, and they did early, and I just kept thinking that they would probably keep tanking, or I just did not in any way see that the market was just going to go straight up for the entire foreseeable future. It was just, it's crazy. It's I mean, I don't do that much with stocks, so I haven't got crushed too bad, but I've been really, really, really surprised.
To be
Yeah.
fair, so
Because
did almost every
the stock is
traditional
all
hedge fund
because of the
manager.
money, right? It's
Yep,
just because of all the money in the system. It's just too much money chasing after too few chairs.
And the question is, will that change, right? Like the Federal Reserve is now the largest holder of stocks in the world. Like, is that going to change in a month? I don't think so. I think it's like, you know, the U.S. is in a pretty rough spot, and stimulus is there for a specific reason. And when I say rough spot, I'm talking about like state of the virus, right? Which has sparked a lot of this. So if that's not going to change, and money's still going to be flooded into the system, and are the markets really going to get affected as much? Because Brian, like, I was in the same boat as you. Come March, I felt like the smartest guy in the world, you know? And it was like, I remember how many times me and Luke would chat, and I'd be like, Luke, dude, I'm not even touching anything. I'm staying far from every month, and then everyone's making money except me. I'm like, fuck this, you know?
Yep.
Just chuck a little bit in there. See where it goes.
Yeah.
I generally agree with Ari's view on it. I think that I do think if Trump wins, though, and he's got 4 more years, I just think it's going to be a printing press. I think he's going to do whatever he can to keep it stilted, which will probably send us higher, and we'll probably have
set himself
11.
up for that third term reasoning.
There you go.
Yeah, but don't you think Biden would do the same? Like, why wouldn't Biden do the same? Like, think what would happen if he let that slide, and, you know, the pandemic progresses, the economy worsens, stock market gets crushed. Like,
It's not that he wants that to happen. It's that the Democrats' platform in general is, you know, certain taxes and a lot of benefits are just not going to be good. You know what I mean? It's if he's going to fulfill what the Democratic Party is saying they're going to fulfill, it can't possibly stay equally good. Yeah.
Yeah.
So what's the play going into the election then? Is it don't put the pedal to the metal, keep the foot off a little? What's everyone's play?
Not clear to me yet. The super obvious trade, like I need to talk to some more Wall Street friends, but I think everyone's thinking is Fed and Trump will do whatever it takes into election day, and so it's kind of write it as close as you can. But then if you don't want to be the last one holding the bag come election day,
Right.
That almost seems too obvious, though. Markets usually don't make it that easy. So I don't know. So either probably the top comes a lot earlier, or maybe everyone's mind's blown and we just rally straight through election day and the high comes in 6 months or whatever. I'm pretty bearish equities over the next 5 years. I think we're probably going to get something that looks like the 70s, where equities were basically flat in real terms for a decade, maybe up slight nominally. Basically weakening fundamentals and a weakening country, but equities propped up with new money. That's my best guess. I offer that humbly. I don't know what the future holds.
Could have really punished you there, Gunny. I'll let you off maybe too easy. Yeah.
I'm a little loose right now.
Would you say tilt, Gunny?
What's that?
You said loose, but would you say tilt?
No, definitely not tilt. There's no anger in me right now. This is all
good.
All fun.
I feel like I've only been tilted once we've ever played. I lost 7 buy-ins that night, and it was like, it was like 3 in a row.
Would you ever go to a poker table? Would you ever go to a poker table in Vegas and drop 7 dimes?
Never.
Many times.
And did you go on tilt after the 7th buy-in or before? It
was like buy-in 4 or 5, because like 3 and 4, or I think 2 and 3 and 4, I lost like immediately. It was like kings versus aces versus kings. I lost on both sides, and then it was all in the matter of like 4 or 5 hands. I was like, what the fuck? And then I, had a couple more drinks and spilled the drinks, and it was from 8 till 3:30 in the morning. So I was like,
Oh, God.
the next day I was like a shit show. Like my wife wanted to kill me. It was a disaster.
Did you tell her how much you lost?
Yeah, I told her. She doesn't really keep track of what Bitcoin prices. So she's like, "How's Bitcoin doing?" I'm like, "Oh, it's good." It's like, "How much do you use on a little Bitcoin?" Which is not a lie, right? Like, little Bitcoin. So,
So at Bitcoin goes to 100,000, how much does a gallon of milk cost?
In Satoshi? Is this a math problem?
In dollars, greater than $10?
I think almond milk will be greater than $10.
That is a really good point, Crystal. I could see that happening for sure. I could see almond milk going above $10 pre
Yeah, with
Bitcoin
with or without,
100,000.
for sure.
Yeah.
because almond milk is really fucking good.
And hey, with the shit going on in California, right? We get most of our almonds from there, right?
All right, I think we got to trade, man. we got to go find an almond curve.
It's all about oat milk now, though. We're moving on to the other milks.
My wife and kids are a family of oat milk for sure.
Why oat milk over almond?
My wife's allergic to almonds.
Ah,
So
there you go.
pretty much made the decision for her.
I like coconut milk personally, but I think coconuts are overfarmed. Almonds are overfarmed. If you've ever tried to get an almond out of an actual like fresh almond from the tree, it's just as complicated as a coconut. So, as much as we can diversify, let's do it. Cashew milk, hemp milk. Hemp milk is amazing. Hemp milk was good for you.
I like cashew. Much creamier. It's great for protein shakes and stuff.
Yeah, I had someone ask me recently if it would be possible to tokenize bottled water. I don't know about that.
Tokenized bottled water. I am
Sure.
my favorite company I've invested in ever.
Commodities.
I agree.
Uriah coin?
So, just a quick explanation. So, tokenizing commodities is silly because then you're creating artificially a counterparty to redeem your commodity, which doesn't need a counterparty, right? That's the whole point of commodity. Whereas tokenizing value that's offered by that central company, that makes sense. So if I'm Chuck E. Cheese, I offer these arcade machines, and I sell tokens for you to play on my arcade machines. That's fine because you have to rely on that central party anyways. Anyway, it's just my 2 cents.
Yeah, you could use it as a placeholder, like the way CME futures are.
Because the trading of commodities changed the nature of like farming and all of these things, right? For their ability to de-risk themselves and have sort of like consistency. Like that's a really important part of the ecosystem, if I understand.
Yeah.
Commodities right.
Yeah. So in that's the category where like we're tokenizing something just means replacing stock certificates or futures with tokens. Like you're just changing out the back end. You don't need to use a blockchain for it. You may or may not want to, but like it would be great if CME futures were tokens, just in the sense of more programmable, more flexible, more transparent.
Right.
What about energy? So there are actually a lot of projects that seem to be coming up in solar and energy, and they're tokenizing it as a unit of, I guess, exchange.
Credit?
Yeah, exactly, for the actual utility itself. So you have a certain amount of energy that you can use. I'm not sure if any of them are successful or if they're all just theoretical, but has anyone heard of any of that?
I looked at one in 2017 that was called Greenium. I'm Google searching it now to see if it exists today.
Is it like the equivalent of like carbon credits? Like you get emission credits or? Or
That was
like
that was the Greenium model. I don't know if they still they may be a thing today. But yeah, at least as they pitched me in 2017, their model was both you earn tokens by selling I think it was actually providing the electricity itself. Like the idea was they were trying to build power grids, or it was a layer that would sit on top of local power grids, and it was an ecosystem and a rewards point and all this stuff. Yeah, some of that stuff could work. I think a lot of it requires a lot of infrastructure. Like the value add might be fairly, like a rewards point token can be useful, can be valuable. I have nothing against them, but generally you're not adding that much value by providing a rewards point to a shopper, to doing like, some people feel like, it's like they invented a major tech breakthrough that's worth $1 billion because they said, let's slap a token on something. It might be a fine business, like Storm and Lolly and Fold. That's a good business. I'm not trying to knock it, but it's also like a pretty simple kind of nuts and bolts business.
I love Lolly personally. I think the simplicity of it and the arbitrage of the affiliate and everything they're doing is perfect.
No, but sure.
Yeah.
But like all the value in a company like that is in the user base they built, the brand they built, the network effects they built. If I told you I'm going to launch another Lolly, like I copied their code, right? And I copied their business plan, their 5-page deck. Like I didn't just create $1 billion or whatever Lolly's worth. I didn't just create $100 million thing, right? Like all values in the execution. I guess that's what I'm trying to say. It's the values in the execution.
Got it.
Yeah, that was. Sorry.
I was just gonna say, talking about water and tokenizing. One of my favorite companies I've ever invested in, this traditional company, Zero Mass Water, basically makes solar panels, pulls water out of there, gives it drinking water. A bunch of places is like, I think it's 50 cents per year globally per liter. Something like 500 billion bottles of bottled water sold annually, 95% outside of North America. So crazy huge market. And basically the big thing is, nobody can get clean water, got to buy bottled water. You can drop in a panel and basically produce it at a fraction, call it a third or a quarter of the cost that bottled water costs, and have clean water. So we've done a bunch of charity things, drop them in Kenya and Guatemala and all these cool places, or in 40 plus countries. But basically the thing that I was exploring with them was the ability to, basically to fund CapEx, right? Where you're basically dropping, because if you go to Jakarta or South Africa, like people, they just like solar, like they can't finance this. They can take the water for cheaper than bottled water costs, and they would do it for drinking water, but they can't finance a panel themselves. What you do is collectively you finance a panel, and then you're essentially selling them water as a service. And you sort of calculate the rate, whether it's in a hospital or a major utility or something. So the draw rate's pretty, like the math worked out to being really nice. So that was one way that I saw potentially tokenizing water, and it's not the water itself, it's the asset that generates water, and you're essentially funding CapEx to deploy these and then charging as a service. There were some cool models around that. Tokenizing actual bottles of water themselves, I'm not sure. And they didn't go that route. They raised more and more traditionally, and they're killing it. But yeah, I did see that, and I do love that company. So if you're interested in clean water tech, I think yeah, they're pretty amazing. Muted again, Ari.
Thank you. Challenge for tokenizing bottled water that pops to my mind is the whole idea of having a kind of fungible commodity that's tradable is the standardization, and that includes delivery. So like if you buy a gold future, that entitles you to take physical delivery of gold in a particular location. And bottled water, almost the entire cost is the distribution. So that, like, I think that would be the challenge. Like, how useful is it that I have the right to pick up truckloads of bottled water from like a North Dakota warehouse?
Yeah, oil delivery earlier this year, right? That was the entire thing, right? It was nobody wanted to take delivery.
They couldn't. Every method of transporting oil away from Cushing, Oklahoma was already contractually booked, and people were breaking contracts. Like someone would call them up and be like, "I'll pay you 10 times your contracted rate," and they would break contracts. But yeah. You could not get oil out of Cushing, Oklahoma. That was when the crude oil future went negative. Was it like, I think, negative $37?
Yeah, May expiration.
It was wild to watch.
Yeah.
That was
First time it had ever gone negative, but it wasn't really a surprise. The CME added the negative prices weren't even possible on the contract in their database until like 2 weeks before it happened. And they said, we think prices might go negative. We're rolling out a database patch to make it so we can price that. And then 2 weeks later, they went negative. So it wasn't that shocking. But a lot of people, like there were stories of, people personally trading their Interactive Brokers account and having a giant bid sitting at a penny, not thinking it was possible for it to go negative.
And then getting rolled.
Punished, man.
Yeah.
Punished.
Yeah. It's commodity trading is interesting. I never had anything too crazy happen to me, but when I was at Susquehanna, which was a big prop trading firm, they would always tell new traders a story about the guy who was long live cattle futures at expiration. And you can still get out. Basically, the way these things work is there's an expiration time. And if you still hold the future after that time, you then have to take physical delivery. So you have to actually receive the cattle or receive the crude oil. And live cattle, that literally means some place in Texas, you actually have to accept like a herd of 2,000 cattle. And then there's auctions in that area to local farmers, but it's like a week later. So a SIG trader flew down there, arranged to like shelter and feed this herd of cattle for 2 weeks, and then auctioned it off. And the point was like, pay attention to your expiration times.
Right.
Because you don't want to do that.
That must have been a fun auction for everybody participating when it's just like, all right, everybody, we can lowball him as much as we want because there's no way this guy wants another 6 months of holding cattle.
Well, normally they do that. When you go past first notice or you get into those delivery periods, there's people that generally it's going to be like some commercial or some farming, related desk that's going to make a massively wide market, knowing that your risk management, it's going to be SIG that's going to be on the other side of it, and their risk manager is going to say just fucking dump it.
Yeah.
And SIG would have, but they sent the guy there to teach him a lesson.
I love that.
And to have a story. But SIG was pretty sharp, and they did not let that happen often.
Yeah, sure.
So I don't think SIG was the other side too often, but yeah, look, it happens, and you've got a stable of young traders. We all made mistakes. I remember one time I fat fingered a trade in heating oil. This was in I think what was it, 2008, when heating oil, nat gas, and crude oil, they were all at their all-time highs. And I didn't buy much. I bought like $10,000 worth accidentally. I've been like thinking about buying, but I basically accidentally market bought instead of limit bought. And it set a new all-time high in heating oil. I just moved the price like 20 basis points. And then I had a Bloomberg terminal, and instantly it says heating oil races to all-time new highs. And it's like, I'm a 22-year-old trader. It's like I was a 22-year-old. I'm like, I just misclicked, and I'm generating like headlines about global heating oil demand. So, that sometimes the world is a lot more pedestrian and prosaic than we like to think. Like, it's not always like billionaire masterminds manipulating markets. Sometimes it's 22-year-old kids hitting wrong buttons.
Probably a good early peek behind the curtain for you two of just like, oh, like some of this stuff just, is not at all what it seems. Yeah.
Yeah, good. And I think there's so much more of that in financial markets than people often appreciate, where it's like I'm not attacking TA, but it's like your TA has to account for that. Like, that's part of TA. That's what, that 22-year-old hitting a fat finger is part of what's drawing the chart.
Right.
Yeah. And in that case, I didn't move in much, but they're obviously giant fat fingers. There are algos that run amok. There's forced margin calls for very weird reasons that aren't like affecting a market as a whole. There's a lot of movement on charts that is not kind of what you normally think of as behavioral finance. Or
I was on a podcast 2 weeks ago. I was telling a story about when I was trading equities, like during the whole internet boom bust, like around like 2000. I was sitting like 2 spots down from a guy who dropped like 400 grand. He was just getting his ass kicked throughout the day, and he literally picked his keyboard up and smashed it against the desk. And when he did that, it stuck one of the buttons that started just market buying the fuck out of, I forget what he was trading. Maybe it was like Broadcom or something. And he ended up with like a ridiculous amount of shares and ran the thing up like $60, and he ended up making like all his money back on the day. but he like kicked off so many algos. He kicked off all these buy orders.
Yeah.
Like it sent the market crazy. And like everybody, exactly what you say. It's like when everybody talks about they or that like that mastermind behind the curtain on the other side of the market that's always trying to fuck people over. It's never what it seems, ever.
I had another where a guy sitting next to me slammed the desk, and we're all like, the trading shops, you just sit next to each other. The billionaire head of our firm just sat on a desk, and he slams the desk, and that caused two people to accidentally click and do trades. Yeah, you get some very, and those are probably the most boring ones. What I think better.
I always love hearing stories from my friend Ari was on Morgan's options desk in 08, and hearing about just that time in general is always seems crazy. It seems like the stories that come out of that kind of time and environment are just, yeah, the desks are insane.
One interesting story that my boss at Chicago would tell, who had been a partner of Morgan Stanley, was right after Lehman failed, there was rumors on the street that Morgan Stanley was about to fail. And the reality was they were 24 hours away from going under. They desperately needed a equity infusion. And like you couldn't get an audit done. Like everything was happening so fast, you couldn't do anything. And they were getting margin called basically actively. And they would have had to declare technical bankruptcy within 24 hours because they couldn't meet contractual obligations. So they like super fast negotiated with some Japanese bank, I forget which one, a giant one, that gave them that equity infusion. And basically it was like a bank holiday, so you couldn't wire the money. And so they couldn't they couldn't actually have the cash in time because it was a bank holiday, but they still had contractual payments. So they flew by private jet an oversized check from this Japanese bank to Morgan Stanley, like put it in a giant case and like put it in a fairly prominent room, and like sent pictures of it to their counterparties and like showed all their employees, like, we're solvent guys. Like, even though this is not in our checking account, we have the physical check. And they sent like 3 people to escort the check, because basically if that physical check, if they couldn't display it, they maybe don't open their doors the next day. Well, they open their doors, but they go through bankruptcy.
Yeah.
So like a check that you'd like a golfer would have shown
Gilmore
when he won a
style.
golf tournament, Happy Gilmore style. Yeah.
Yeah. It was here's the physical proof that we have the money, even though you can't call a bank to verify we have the funds.
Amazing.
Crazy stuff. Yeah. The path dependency on that is so amazing. Like, I think people who weren't there at the time feel like the world was ending. Like, we were near every large bank in the country having to declare bankruptcy. Like, we were probably 2 weeks away from that without the massive interventions we got. Yeah, I think it's like people kind of remember it as, well, it wasn't that bad. It was a big equity sell-off. One prime broker failed, but it wasn't the end of the world. But it kind of was, without basically the Fed bailing out the banking system right when it did. All the large banks fail, and most large hedge funds fail because all rehypothecation stops. The whole borrow and lend market falls apart instantly. Citadel would have gone under. Something Ken Griffin, founder of Citadel, was also on the board of UChicago when I was at the endowment there. So I had a few, I don't think he knows who I am, but I had a few encounters with him as a staff member. A story he liked to tell was that Citadel, I believe, was using Goldman as a prime broker, and Citadel was very famous for being a shadow bank, for replicating the prime broker model without being a prime broker, kind of having the best of both worlds in terms of not being regulated, but being able to do this kind of crazy rehypothecation leverage lending. And during the financial crisis, Citadel was getting crushed because they had a lot of CDS exposure, a lot of long credit exposure, leveraged long credit. And I think it was Goldman said, "We're pulling your credit. We're calling all your credit lines as your prime broker." And that would have made Citadel insolvent that day. And the story Ken Griffin likes to tell is,
Hold on, sweetie.
They basically had got their lawyers on the phone and said, "You can't do it. Look at the fine print we've crafted with all these bilateral agreements with you." And the bank said, "Well, we don't care about the fine print. You'll be suing us for 5 years. Like, it'll take 5 years to figure this out, and we'll have your money. And you won't even exist in 5 years to finish the lawsuit." But they ended up looking at the contracts, and they were so carefully crafted that this is, as Ken tells it, that Goldman basically said, well, if they have agreements this airtight with everyone, maybe they'll survive. So that's the story Ken tells of how Citadel survived despite being bankrupted by their levered credit lines. Not bankrupted, rendered insolvent.
Pays to have good lawyers.
And good negotiation when the times call for it.
Yes, yeah.
Ken is a force of nature.
Which Ken is this?
Ken Griffin of Citadel. He's a very famous kind of financier. So Citadel is one of the world's biggest hedge funds, and he's always been a pretty prominent vocal personality in the financial world. Very much a creator of his own narrative. He fought very hard for Citadel, which I think at the time was like a $15 billion hedge fund, for it not to die. So like one thing was all of his investors tried to redeem, and he gated them. He didn't let anyone take their money out, which was legal, but a lot of people viewed as ethically questionable. You're not really supposed to gate investors just because you don't want to give them their money back. You're supposed to gate them really if basically you literally can't sell the assets. There's just no, like, for example, if I invest in a SAFT that I'm not legally allowed to resell, and all of my investors want their money back, I can gate them because I literally have an asset that can't be sold. Like that's kind of usually the defense of gating, that it's to protect the investors themselves, to avoid me having to sell this thing at 1 penny maybe. And there's cases where you just literally can't sell it for regulatory reasons for a year, for some amount of time.
Wait, how long can you gate someone? Like, say someone wanted to like do it pretty recklessly.
It's defined in the PPM, the private placement memoranda of the hedge fund.
Okay.
It's very common to have a clause like that, and typically it'll be 12 months or sometimes longer, sometimes years.
Yeah.
Often the language is constructed to be very favorable to the hedge fund, to be the fine print is basically forever. But again, it's not so much that you legally can do it, it's that do the circumstances actually make it in the investor's interest?
Yep.
Is it actually, like, you wouldn't necessarily want, for example, let's say I have 10 investors and I have one investment, and that one investment is super liquid, but it's going to be liquid in 1 month. If I have to sell it today, I have to sell it in a fire sale way at an 80% discount. But if I wait 1 month, my investors get full price for it.
Yeah.
Well, it would kind of be unfair if one investor redeemed, but the other 9 wanted to stay in, and that forces me to sell the entire asset, then 9 investors get screwed. So gating the one investor to protect the 9 kind of feels fair, or at least it's not for me, it's for them. But if you're gating just to protect yourself, it's not really what it's for. So that stirred up a lot of controversy. Yeah, personally, I would never gate unless it was that kind of 1 in 9 scenario. Like if it's to protect a larger group of investors from that kind of forced liquidation. That's a legitimate reason to do it.
What does the $10 bet mean, Charlie? What does that mean?
I'm scared of you.
Maybe fat-fingered. Maybe someone banged his table.
Fat-fingered, yeah.
Yeah. Someone in the Starship smashed your table.
Huh.
Is it a happy huh or a...
Hmm. Bad river.
Don't farm me here. Don't farm me.
The suspense.
Oh, wow.
Yeah, that flush, I think, scared both of us.
Hey, Ari. So you know about equity stock options, right? Equity options, right? In the stock market.
Well, it sounds like a few of us do. Dan
Okay,
Dan said
so-
he was a trader. He probably knows more than I do. Although I did trade equity
Okay.
options for a couple years.
So I'm going to ask both you and Dan a real life scenario that happened last Friday. It's a little bit sad to talk about, but I think I want to get some expert or some more professional expertise on this. So Tesla, I'm an investor in Tesla stock, and I happen to have sold covered calls.
Mm-hmm.
So I won't go into explaining it for everyone. If you can follow, you can follow. Covered calls in the money. So Tesla closed. I had $410 Tesla calls short position, and it closed on the market on Friday. Last Friday was option expiration week on Fridays, as we all know. It closed at 418, I think. So it's in the money, and my expectation is those one contract is 100 shares, so let's say 100 shares. And I had a matching long position of Tesla. So these were covered calls. And by having that position open at market close, I was expecting the long position holder of the call position to exercise and buy 100 shares of my Tesla stock for $410.
Yep.
But after hours, about an hour and a half after closing, this would be 5:30 p.m. Eastern time, market closed at 4, the S&P committee announced a very bad news for Tesla, that it was not included. It was not to be included in the S&P 500 index. And as people who follow that stock knows, that was terrible. After hours prices crashed. It went from 417 down to 400, down to below 400 to $300 in the aftermarket hours. So it is my understanding my call option, my short position, should have been exercised because it closed in the money. And I would have gotten rid of my Tesla stock at $410. Now, I didn't know what was going to happen after market, but I was happy to sell my stock at 410. And I called my brokerage, E-Trade, in the afternoon after the bad news came. I was like, are you sure it's going to exercise and take away the stock from me? Because I want that to happen. They said yes, but push comes to shove. The next day, I find out no one took my position, and I got an assignment from E-Trade saying my short options expired worthless. And I think there's some shenanigans going on. Because the option holder, the long contract holder, should not have a peak at the after hours trading, because the optionality of the option should have expired at closing time. E-Trade says that up to 1 hour after, they can still call in to either exercise or not exercise. The long holder has the decision, whereas a short holder doesn't. That's what I was told. So I think there's some shenanigans going on where, if you can sort of make the decision after hours in a big market move, and you could sort of decide after the fact to not exercise, then you have a tremendous power. And basically, I'm not like a lame duck. I couldn't do anything. So I think it was tremendously unfair.
What is this on? Sorry.
Tesla stock.
So basically the question is, and Dan, my memory of this is both from a very long time ago and a little hazy. Basically the question is, the stock market closes. There's then some window of time where the holder of an option can choose to exercise or not. And in Bobby's case, in that window after hours, Tesla plummeted. A call that was in the money.
It didn't plummet in the first hour. It plummeted after 90 minutes. In theory, the window has already closed.
Bobby were you short or long?
Short.
He was short.
Short.
Yeah.
The money call options.
He assumed that those calls would get exercised. They weren't. Is that unfair? And also, if you happen to know the rules, so from my memory from Sig it was something like maybe it was 90 minutes that you had to decide if you wanted to exercise or not. But I may be wrong on that. Maybe it was 60, and maybe that's changed because that was from 2009. So that rule might even have changed. So yeah, first question is just operationally, how long do you have to choose if you're going to exercise or not after the stock market close? And then second question is, basically, is that fair? Is there
so is it American?
Well,
these are American options?
Fine. These are on the NASDAQ Tesla TSLA stock.
Okay.
I think they're NASDAQ.
Yeah, American style.
Yeah, so they can choose to exercise whenever
Yep.
they want, effectively.
Well, hold on a second. It's not whenever, right? There has to be a deadline. There has to be some time where they can no longer make a decision. They can't go into Monday morning and say, "Oh, I can still decide to exercise or not exercise."
Right.
Previously
There's
expired
like a
option.
window, right? And then there's I think there's some type of like matching that goes on also. Like it is possible that you can't get that you, even though they theoretically would be exercisable because they're
In the money.
they're in the money, that they actually wouldn't.
I think that's pro rata at the prime broker level, although that could end up with a weird result for Bobby at the individual level, like using a broker. Like maybe there was a trade we used to do at Say, I'm sure it still gets done, is when there's stuff that's like questionable, whether it's in or out of the money, and you have a lot of retail interest in it, what you do is you open both a large short and a large long and short position in the same call. They would do this specifically when you wanted to early exercise an option to collect a dividend. And the idea was some people aren't smart enough to early exercise, and you benefit from that pro rata. And so you accumulate a really large long and short. Sorry, this is probably taking us off track and is more subtle than anyone cares about.
Yeah.
So Dan, so the question is do we know how long you have? And I think it's something like 90 minutes. But the second part is, I don't think it's unfair because it's not.
No, hold on.
It's just though that's when the stock market.
No. I'm not calling it unfair. I'm calling something else unfair. So let's say that when those 90 minutes, right? If it's 90 minutes, if the rules are clear, then that's fine, because S&P announced the results after the 90-minute window. So they don't, remember, these people who announce newsworthy events, they don't announce it at 4:01 p.m. They always wait until 5:30 p.m. because of that window closing. It was on a Friday options expiration day, right? So my gripe is that did the shenanigan happen after the window closed? And I asked my brokerage, they can't give me evidence, and they won't. And I'm thinking of filing a lawsuit because this is a lot of money. Like if there's systematic, what's the word? Cheating against retail options investors. I mean, that's really grounds for a huge class action.
Quick Google says 5:30 Eastern to receive exercise notice. I'm not sure
Exactly.
if that's accurate.
But the news came out after 5:30 p.m.
Yeah.
So that's an hour.
So and then the stock traded after hours, at 5:30 p.m. it was still traded in the money, as far as I can tell. So why would the option not get exercised? So I'm thinking that overnight someone said, oh, these suckers, retail option short holders, we're just not going to exercise, right? They can essentially the long side, they say, oh, you're stuck with it, sorry. And the short side say, oh, you didn't sell it. And the shenanigan happens, I'm going to go buy on the market on Monday morning and just sell it to the long holder. And the short, that's room for shenanigans.
The only thing I can think of is, let's say there's a smart money large holder of calls. The fact that you're a little bit in the money, I could imagine them saying, well, this isn't a liquid market price. Like we couldn't actually sell $20 million of Tesla at this price. We think the price will be falling $10 over the next hour.
So that's
the only thing I can think of.
Exactly. So now next question is, where's the audit proof? Where is the evidence that my
on me.
short option did not get exercised because the corresponding long guy did?
What'd you have?
I had the king. I didn't fold. It folded on me.
Wait, you had pocket kings?
This thing I had the king as well. We would have split the pot. This thing
you wouldn't have split
no, I had jacks.
I had pocket jacks.
I had pocket jacks. I had the set over. You were threes over kings. I had jacks over
saved you
threes.
a lot of money, yeah.
Yeah. Damn. Just kidding.
Wait. You won with the.
I had jacks over. I had jacks full of threes.
Wow.
Three.
You thought I had the 3, huh, Dan?
Yeah, there you go. But
yeah.
Okay, great.
So Ari, the potential theory that you're floating here is that it expired very close to the actual value, and somebody said it's basically outside of the risk threshold to actually exercise that option. They wanted to be very long or very short, or very inside or very outside, and they opted ahead of time, even though it was in the money, to not exercise the call.
Yeah, so I'm okay with
the
that
only
theory,
thing I can
but
think of.
I can. Yeah, aside from the shenanigans, I agree with you. Okay, that's a possible theory. But what I want is there a paper trail audit that says, okay, this guy who held 100 contracts long he chose to not exercise, and that 100 contract got assigned to you guys randomly.
You'll
And
probably
not,
have to
not
sue.
more, right?
I've never seen anything like that. You're probably suing basically to get the internal record keeping of the broker and the prime broker, which they're probably not going to give up without a lawsuit.
So who's OCC? OCC is what? Is the prime broker? Because E-Trade was like dismissive.
No, that's the options clearing.
No. The OCC told me they sent us who got closed and stuff like that.
They're the warehouse. They're the option. That's options clearing corp.
Yeah. So is there any room for shenanigans over there where someone overnight on Friday night, Saturday morning
No,
can say, oh, you know what,
Bobby,
here's an opportunity.
I will tell you clear as day that I think it would be worth looking into the procedures at your PB, like who you're clearing your trade through, but there is no shenanigans at the OCC. There's no way.
Okay.
Yeah.
So can is E-Trade already itself a prime broker, or is someone behind E-Trade as a prime broker? I'm using E-Trade as the retail broker.
I assume I don't think they're a prime broker. I'll look it up. E-Trade's prime broker.
I don't believe they are. I think they have a.
Can you guys hear me?
Yep.
Yeah.
There it is. I'm just trying to use another computer. What's the website again for this thing?
Fadedspade.com/card club.
Faded Spade.
Oh, so E-Trade is a
Faded Spade
subsidiary
poker, I
of
think.
Morgan Stanley now. So maybe E-Trade is using Morgan Stanley as a prime broker since Morgan Stanley owns them.
Yeah, that's right. Morgan Stanley. So do you guys think it's legit what I explained, or should I look into it and
Speaking for myself, I don't know. I don't have I would assume, as Dan is assuming, that you probably weren't cheated, but who knows?
But so let me be more specific. Okay, let's say it's you personally. It happened to you, Ari or Dan. What would you do? Would you just take it?
I think I probably would, knowing how long an arduous path it's likely to be to find anything out.
Well, and to answer that reasonably, they need to know, like, maybe not your exact size of the position, but relative to you. I mean, is it a very, very, like, with some portion of with it being an extremely large position relative to you, you may be more likely to take it, clearly, than if it's a.
I missed the beginning of the story. He was short the Tesla call.
He owned a bunch of Tesla stock.
Okay.
Short the Tesla call. Goes into expiry. Covered call. Expires at
in the money.
The value being 418. The call was for
410.
Mm-hmm.
90 minutes go by, still in the money. S&P announces that Tesla is not going to be included in the S&P. Stock takes off to 390 or something. He thinks his Tesla shares are going to be sold at 410 for his covered call, and they don't. And so now he's lost basically a bunch of money on all of his shares that he's held.
There you go. Thank you, Brian.
Yep.
We're talking about millions of dollars. Okay, we're talking about I lost like $50 million.
Was E-Trade the principal? Were they the principal or an agent in that? Like, are they on the other side of the trade?
Well, it'll be other. I don't know who's on the other side of the trade. It's just options. Short match against long position.
What was it? I guess this is all on a relative basis, but it kind of to what Brian's point is. Was it a meaningful position?
Yeah, you just said it's very big, millions of dollars.
No.
Oh, sorry.
Tens of millions.
Tens
of billions of dollars.
Tens
of millions of dollars.
There's probably something in the fine print, and there's something that is giving, like, I don't know. I would. It's really a good question. I can tell you that the OCC is not doing anything suspicious. I mean, I can't tell you with 100% probability, but like I can tell you with a very reasonable probability.
Yeah.
But and probably E-Trade's not doing anything suspicious, but there might be something in the fine print of
my point is someone. Yeah. So aside from the documentation and the expectations and all that, my point is there's room for a lot of shenanigans here.
Like your retail, you're getting
But I can't get slammed by not like I understand that there are rules, right? I can't get cheated by people breaking the rules around me, cheating around the rules. Does that make sense? If the auctions expire at a certain time of a day, and the decision to exercise or not exercise has to conclude at a certain time of day, and if that decision is allowed for someone to make a late decision sort of play, then that's
I don't know how
cheating.
it worked. Was the stock halted pending the news?
The stock stopped trading. The issue is the options.
No, I get it.
Exercise, right? So the stock. Right, think about it. The stock closed at 418. My short call was at 410. Closed in the money. I should get assigned the call and sell my stock at 410. So, even up until after hours, it was still in the money. The question is after 5:30 p.m. when the bad news comes out. By then, all option holders, long holders, should have already made the decision to exercise or not exercise. Do you follow me, Dan?
I totally do.
Okay, and now the question is, when the bad news hits, it plummets.
What time did the news hit?
After 5:30 p.m.
After 5. Okay.
Yeah. And now, do the people who have the long option can say, "Hey, OCC, I changed my mind. Don't exercise."
No fucking way. Yeah. I would say that. I mean, maybe that news was public before you saw it hit the wire, and it was within the window, and the Tesla traders knowing full well that news was pending. Like, did they?
Something just occurred to me randomly. So SoftBank has been, I don't know any details of the story. I just read the Wall Street Journal.
That thing is amazing too. That's a great thing. That's a great
Could that
story.
be connected to this? Like, maybe
I have no idea. They bid up the big calls, man. You guys should have seen last week. The calls were so nice and juicy.
Good call, Ari.
Because they had right. So the story was that they had like $4 billion of call. Outstanding. Awesome. So maybe they lacked the capital to exercise. Like maybe they couldn't exercise. Maybe they should have exercised in the money calls, but didn't because they were in kind of a quirky situation of not having $200 billion to put up to actually buy the equity. I don't know.
Okay, that's another explanation the customer service agent told me, but I think that's bullshit, right? It's like, anyways, if it happened, the point is, if it happened before 5:30, I'm okay with it, right? I'm okay with the rules, up until 5:30, they can decide, or whatever, 5 o'clock. What I'm not okay with, if that decision was flipped or if that decision was made after the 5:30 p.m. And
it's really weird.
The problem is they don't tell me the news until Saturday morning. It's not like they told me at 5:30, "Oh, Bobby, good news, bad news, your option got because I didn't get exercise." The problem is they withhold the decision until Saturday morning, which there's a lot of shenanigans happen in the intervening, 16 hours. If you guys follow what I'm saying.
Yeah.
I don't think we have any insights for you, Bobby.
Right.
We don't know.
Yeah.
It doesn't sound.
Really? You're value betting that?
It doesn't sound suspicious, then?
Is it not strange that he can't get an answer? Like that they're just like it expired in the money and they're like, eh.
That to me is more suspicious than anything. Like, good customer support should go get you a fucking answer.
No. The answer they say is OCC assigned it to you. They just hide behind OCC's decision. And I'm like, where's the evidence? Like, oh, sorry, there's no evidence. This OCC told us that your options were not exercised.
Were not exercised, right?
So that's not strange to me because like that probably is the process. Like E-Trade as a broker doing customer service, like their team doesn't know why a particular strike of Tesla options did or didn't get exercised. Like they don't know or care.
I'm just pointing out that it's not fair when I get of it 16 hours after the fact, right? It's gonna come in. It relates to the other story, Yeah, go ahead.
I was just gonna say it also comes down to like, is that common? Is it common for an option to expire in the money and not be exercised? Like, is this a 0.001 event where it's a weird thing, or is it something that happens like 5 to 10% of the time and it's not that big of an anomaly?
It's not common. It's not common. What's uncommon is a big drop on a Friday of S&P, right? Because why did it's very suspicious that S&P would do newsworthy events on a Friday, knowing that Friday after hours when options.
Yeah, but you're assuming the change, like you're assuming that they decided not to exercise after the news. But Ari was saying
I'm trying to eliminate that. I'm trying to say, is it that shenanigan scenario?
And what I want to know is does it happen that people willingly don't execute in like a small, this isn't necessarily small, like 418 to 410 is not that small, but if it's like 410.5 or 411, like is it common that people would not execute that?
Yeah, so brokers will automatically execute options that are in the money by a tiny amount, like 10 cents as a threshold.
Yeah. Yes.
You as a professional trader could choose to override that, but that was always and again, I'm everything I'm saying is from like a decade ago, so I'm out of date on this, but you didn't, if you kind of couldn't forget if an option was in the money, it would be automatically executed.
Option,
but does the broker capital in your account to support it? So but because of the pro rata thing, it's unlikely that so if the fact that it was zero, if you'd been, if 80% of your calls have been exercised, that would make a lot more sense to me.
Right.
The
broker
player
gets an allocation, right?
Right. So maybe there was
the broker, right. So your account doesn't face OCC, your broker's account faces OCC, and collectively you're one of many that they pool up all of the firm's positions, and then that the firm as a whole gets the allocation of those strikes being exercised.
Yeah, and
right?
By the way, I had more than one option open, and all of them got denied of exercise.
Ari, Ari's point that sounds right to me. There's some allocation. You should find out from E-Trade if there's an allocation procedure based on
E-Trade might have screwed you. The question is, was it legal? Right. So let's say E-Trade learned that 10% of their customers' outstanding calls weren't going to get exercised. Maybe they dumped all of that on you, right? Because you're not a gold star.
To me, that's not fair, right? To me, that's not fair unless they have the right to do that.
I have no idea, but that is a question you could ask them. What is your process? In a scenario where there's a pro rata allocation, is it pro rata equally among each of your customers? Do you have some discretion? That's a good question to ask.
Yeah,
I agree with that.
I'll go ask that question. So it sucks being a retail trader.
Yeah.
I might as well go to Robin.
Pretty much.
I'm so happy I'm corporate now. So happy. Corporate farming is the best thing ever.
But back to options quickly. I don't know if any of you trade options. Last week was beauty. Last week, all the option, what do you call it? Is it the VIX or is it whatever the term?
Yeah, VIX is
good. It was huge. The call options were priced I didn't know that. I didn't see the SoftBank story until a day after. I was like, wow, no wonder all the options were so highly priced. So people either made a bundle or they lost their shorts. I
think QE effectively killed the VIX. It almost became it almost seemed to me that that the locals got bigger than the market. The options selling, the ability to just sell options and collect worked for so long that yeah.
I wouldn't call them locals though. So selling volatility as an asset class, endowments and pensions started being short volatility. At Chicago, we looked at some systematic vol selling funds.
Because that's the only way to get yield, to get income.
Yeah, well, the premise kind of makes sense, which is that it makes sense to think of volatility as its own asset class for a few different reasons. And being a systematic seller is kind of like being an insurance seller, which is to say, there's a genuine value creation because you're transferring risk, right? And so having that be 5% of your wealth allocation or an endowments allocation to the systematic selling, it potentially could make sense. The problem though is that the VIX was falling over a decade to all-time lows. And then there's a question of, selling VIX has basically always worked. If you sold monthly, you would have made money basically every time period always. But that was true with VIX at 20, at 15, at 12. Is that still true? And with VIX at 8, at VIX at 7, right? So I thought it was maybe similar to buying a diversified basket of real estate never went down in history. until it did, because everyone was lever long real estate on that premise. So once the whole world is selling VIX down to oblivion, is it still a good strategy? And my view is probably not, but I don't know exactly where, I don't know where the M was, but my view was we shouldn't, forward returns will be worse than they were last decade because it's a crowded trade. Yeah, and we saw that. And we saw that those systematic sellers mostly got their faces ripped off. Thank you.
So when you took Bitcoin, oh, go ahead,
Yeah.
Bobby. Sorry.
I was just gonna say on the volatility, like Tesla options were very highly priced, whereas Apple options are very low. I think Apple, the VIX has been sold off like hell, so there's no premium to collect at all. Yeah, back to you, Dan. You had a different question. Topic.
I'm more thinking about Bitcoin options and it used to be, and I think, did you, Ari, give me the answer on this when you bought the did you buy the 50,000 strike?
I did. I did.
So was your concept that like that basically call skew, like when Bitcoin rallies, it actually has the same effect that like as the S&P selling off. So like the velocity of the S&P selling off basically, like generally, like there's always puts are tilted to go higher faster in an equity sell-off, where in Bitcoin a rally basically is higher, it's the equivalent of fear. Yeah, it gets everybody like basically the wings get super jacked.
Yeah, definitely true, and not that unusual. There's a bunch of other commodities that have that positive skew. So pretty common in things like crude oil. Not always, but you definitely get that dynamic where like basically it comes down to this: you can't really have an equity panic to the upside, except maybe today with the crazy money printing. Like maybe we can imagine a world where there's inflation fears, but historically you couldn't really have like a bomb go off that reprices equities 100% higher. Right, so the risk of a really large sudden move has always been to the downside. But in commodities, it's the opposite, right? Like we can easily imagine, a hurricane knocking out supply of natural gas or oil pipelines blowing up. And it's harder to imagine demand falling off a cliff overnight. Like demand for crude oil, it's pretty hard to like fall by 50% in a week, right?
Right.
Bitcoin historically, it's if you actually like run the numbers in a purely quantitative sense, you get almost zero skew, which sounds really weird, but I think Bitcoin has had such a strong upward trend, such a high average daily return, that it kind of messes up all the black shoals, I think. So like in theory, Bitcoin has shown basically zero skew, and we all would say, but that's weird. Bitcoin has had these massive runs, and it's just because those massive runs get captured in the beta, basically, or in the not beta term, in the just average return. It does show higher than normal distribution kurtosis. I think it showed, this was a while, I modeled it carefully like back in 2017 when I did that trade. It showed historically kurtosis, I think, around 5 and normal distribution. So that means fat tails. That means you're more likely to get really extreme outcomes, which is intuitive. But I was surprised to see the zero skew.
Me too. I thought it just would have been tilted, like everything would be tilted to the call. So like you start to get a meaningful rally. You start to get above, like even like right now, you start to get above like 14,000. Like the fear of the market saying like going to 14 to 20 is going to be like really fast should actually jack like the 20 and the 25.
Yeah.
So like when the market's doing nothing, those end up, even though people are like, God, you're fucking crazy, it's never going there. Well, it doesn't need to go there. It just needs it needs the idea of the market thinking like, wow, it's at 14,000, like this really could go to 20, and now those tails start getting bid up.
Totally. Now, right now, there's a lot of call overwriting. So, in general, volatility has been pretty low in Bitcoin for a while. So in the early summer, retail was buying options aggressively on Deribit, and then they kind of got burned, right? Bitcoin just didn't move for a couple months, so they went away. And I mean, they didn't go away. There's still good volume there, but you have these systematic vol sellers, guys like NYDIG, where their mandate is the same thing that happened in VIX. You have that in Bitcoin, which is weird. Like it feels too early for that, but you have it. You have several multi-$100 million funds systematically selling options every month, calls and puts, and then you have miners selling deep out of the money calls. So kind of have a what to me looks like a bit of a cheap vol curve, and that's been true for 4 months. It's probably going to be true for a long time. Basically, until those structured vol sellers really get overrun, and the guys doing it are talented professionals. That's just their mandate. Like someone has $100 million of Bitcoin and says, "I want yield," and so they deliver it in a price insensitive way, right? They just sell the vol every month, basically wherever it's at.
Interesting.
So generally, you've been able to make money buying Bitcoin options and hedging the gamma. Every time the vol dips below 50, you can kind of, obviously this isn't necessarily true going forward, but I think it's a good bet. Basically, Bitcoin vol under 50 is definitely not a sure thing, but I like the odds.
Right.
And similarly, like Bitcoin vol, like this is a really crazy spread. Like I have no idea where fair is, but like I like selling it anytime it gets over 130. I like buying it anytime it's under 50. I know that's a massive comically wide, like but that's partly
no, but it's not unreasonable though. Either one of them.
Yeah.
Right.
Yeah. Historically, it's averaged, like prior to 2019, Bitcoin vol had been something like 85, 90. And then if you include 2019, it dropped a lot, like 2018, 2019. So then you're looking at more like 70 as kind of the new average. But then more recently, it's been more like 50. So some of that is probably sustainable. Like it's a more mature asset, it's a larger asset, there's more professionals in the market. Some of it definitely is, I think, artificially low. Like we're not, I'll be shocked if we don't have another sustained period of over 100 vol. But maybe that's in a year, and maybe people selling 50 vol are going to make a ton of money between now and then.
Right. Agree. Interesting.
Yeah, it's been interesting. Market makers are basically always long vol now because you just have these systematic sellers. So you can almost never trade to sell higher options. I wouldn't try to buy a Bitcoin option hoping to sell it at higher implied vol, because the implied vol is just, they get smacked down so fast. You can't get size off, but you can profit just by realizing the volatility, right? You just hold it till it expires and either Bitcoin trends or you try to scalp your delta.
So even in a higher vol environment, it's where the market is trading vol isn't fully reflective of what's happening in the market, because these guys have deep enough pockets relative to buyers to get in front of it and just kind of keep it suppressed.
At least for the moment, that could certainly change. I think option buyers got so burned in was it May and June and lesser July that if we get, if Bitcoin were to fall to 7K and then rocket to 15, they probably come back. They're probably like, oh no, there's some juice here. There's some good gambling here. We're not just throwing away our money. So, they'll come back. And similarly, those systematic vol sellers, if Bitcoin made a huge, very quick move, they get a chunk of their capital called away. And some of their LPs may question that allocation. So you probably get less allocated to systematic selling after it blows up.
Yep.
I'm really happy we have a growing options market in crypto. I like options. They're fun. They're interesting.
Me too.
And it was in 2017. It was funny. Like that $1 million trade was nothing. It was a trivial part of our portfolio. We literally thought of it as like one tiny trade. Like it was I spent a little bit of time on it because I hadn't traded Bitcoin options before and I wanted to, make sure I was doing it right. But like, it was not a big bet. And it was delta hedged. We weren't betting Bitcoin would go up. We were betting, basically, I thought the top was in, but I wasn't super confident. I wanted to cut our exposure while still kind of covering my butt if Bitcoin really did just continue going crazy.
Right.
But then but the reality was that was like as much as all Bitcoin options that had traded to that point. Like there just was no volume. And so it got written up as like some crazy rich person is betting that Bitcoin's going to be over 50K. And it's like, that wasn't the bet at all. Right. It wasn't a big bet. Like, it was fun. I got made fun of a lot on Twitter. Like people like Nouriel Rubini, like 2 years after the fact, would like post that. Like I would criticize Rubini and he would like Google search my name and be like, at least I'm not the idiot who bought 50K Bitcoin calls. and I'm like, Rubini, come on. Like he was an options trader. You understand that like when you buy an option, you're usually not buying delta. You're usually not buying direction. Right. For anyone listening, that the idea here is that when you buy a call, you're betting that the thing will go up. But when an option trader buys a call, that's almost never what they're betting on, because you can hedge out the, if you want to bet that Tesla's going up, you buy Tesla. Why would you buy a call? You buy a call because you're buying volatility. You think the implied vol of the option is cheap. And usually when an option trader trades an option, they delta hedge it. So if they buy a call, they're also selling some Tesla at the same time to isolate the volatility. And that's how I approach options as a former market maker.
So you buy the call and you sell the stock? Explain that.
Yeah, so the most basic way to trade options is, well, not most basic, but the most common for option traders is you would buy a call and you would sell the delta of the call. So in this case, so if it's an at the money call, it's probably about 0.5 delta. So you would sell half a unit of Tesla stock. That's basically the same thing as buying a straddle, buying half of a call and half of a put. And the idea is that if you just want to
let's talk about that. So at the money, you sell half the share of a contract, but why? But what does that gain you? So if the stock goes up.
So what you've done is you've eliminated your exposure to which way Tesla goes.
The direction.
And you're just betting that whichever way it goes, it'll go far and fast.
I see.
Yeah, that's a little bit of an oversimplification, but basically the first dollar moves, you don't care which direction because you're hedged. You're hedged to the delta. By selling half of a share of Tesla and owning one call, if Tesla moves $1 in either way, you have the exact same effect.
I see. Interesting.
So you could just trade a straddle too. That'd be another way to do almost the same bet. But it's actually usually cheaper to just do one side. You have less friction. Yeah, so something I like whenever people on my team are kind of like I have young investment analysts who are interested in doing options. Like it's just something you intuitively everyone thinks a call is a bet it's going to go up, a put's a bet it's going to go buy, and like the first thing they train you in as like at SIG, it's just drilling into your head. An option is never a bet on delta; it's always a bet on volatility.
And delta refers to what? The price?
Direction. Delta is it. So
direction.
$1 delta is owning $1 of Tesla. The delta is your exposure
in up direction
to the
direction.
Movement.
So
Positive
a delta of
delta,
one in an option would for every dollar move in the underlier, it would move $1.
Yeah.
The option would move it up.
Yeah. And your Vega is your exposure to volatility. So if the implied volatility rises, you win if you're long Vega. Anytime you buy an option, you're long Vega.
Yeah.
And you're also long gamma, which means you win if the thing moves back and forth. And there's a cost to that called theta. So there's no free lunch, right? So if you buy a call and you sell half a share of delta, you win if Tesla moves either way, as long as it moves enough to cover your option premium, right? To cover your, which ends up getting burned as theta over time. I'll shut up now about the option Greeks.
That's good.
It's awesome. Yeah, it's great.
Let's get into Volma and Volga and Vama and Vanna.
Dan's
before you get
talking
into more complex stuff.
Yeah.
Okay, well, give a brief intro, and I have a question.
These are like second order,
second derivative
Greek.
Greeks.
Yeah.
We actually, when I was at SIG, we never ever used those. The quant teams did, but we actually, as options market makers, never ever talked about that. You'd sometimes see it in a scenario analysis for edge cases, but I think that's changed. Like I left SIG in 2010. I think by like 2012. That was the options market's continuously gotten more sophisticated.
I mean, because they got tighter too, so you had to get had to get more creative in stripping out different risk factors from it, right? Crazy business.
A big thing, like right as I was leaving, a big focus at SIG was dispersion as like the cutting edge. So they did a lot of index trading, and so you'd be trading S&P 500 vol versus the vol of all the individual components, which is a bet on how correlated will the individual equities be with each other in their volatility. And like no one thought about that 10 years prior. It was just like it was a rounding error. It was you were betting on vol. But
right,
as Dan said, once the vol markets are basically consensus super tight, you got to look to the next decimal point.
So all right, back to your $50,000 call for Bitcoin. So do you plan to make money even if Bitcoin never gets to 50,000? Is that the idea?
Yeah. So literally, like this was actually like
what's the expiration? These are.
Oh no, they expired. They were 1 year.
Right.
They were 1 year. So the thinking was
you lost. You closed out.
So we lost $1 million. We made. I'm not. Actually, right. I don't know.
When did you buy it? Just for the audience, when did you buy it, and what the option expiration was?
Oh man, this was a while ago.
Just approximate dates.
We bought it around Deck 17, maybe early December, I think. And then the expiration date was December 2018. And the thinking was,
So at the time, Bitcoin price was about $15,000.
Yeah, sounds about right.
Okay, all right.
And I thought Bitcoin had topped, but I thought Bitcoin topped probably at 8K. Like I had been bearish starting like mid-November. And so the thinking was, okay, Bitcoin is either topped or it's about to, or it will some point fairly soon, but we're in a parabolic phase. And if I call the top a week early, I might miss 100% return, right? I mean, Bitcoin had just gone from 8K to 15K in like 10 days. And so I'm thinking like, okay, I think that we're at the top basically, but if I'm wrong by 2 months, maybe Bitcoin's at 100K, right? Maybe we just continue this parabolic move and then it crashes 80%. I was very confident there would be an 80% crash at some point, but I didn't know from what level. And so I don't want to ride Bitcoin down 80%, but I also don't think I can really time the top. So how do I deal with that? Well, my thinking was, let me sell out of a bunch of Bitcoin exposure, take a lot of risk off the table, and buy a cheap call that basically if Bitcoin doesn't get there, I lose almost nothing. It's a rounding error. And so okay.
Bitcoin does get there.
And if it does go crazy, that kind of makes up the difference. That kind of covers me. I don't as a crypto fund manager, my mandate is to kind of capture up move. Like it's kind of a crazy double-edged mandate, right? If Bitcoin goes up 10x, I'm supposed to capture it. If Bitcoin falls 80%, no one wants to lose 80% of their money. So how do you capture a 10x and not risk losing 80%? Well, one way you can do it is by having a bit less Bitcoin exposure. So if it falls, you don't lose as much, but you still have a call to capture that upside. So that was the thinking. We ended up making a little bit of money to it because we were delta hedged. So we lost less when Bitcoin fell because we owned the call. The call itself lost all its money, $1 million gone, but we owned less Bitcoin and Bitcoin fell. So it wasn't a great trade, by the way. The volatility level I paid, I thought was fair. It was almost like a utility. It's like buying insurance. You don't buy insurance because you think you're making money. You do it because it makes your life easier. You're reducing you're smoothing your risk. So I did it to really smooth our risk. And I only did $1 million because the price wasn't great. Like if I had been able to buy that call at 50 vol, I would have done $15 million. Like I would have, that would have been an amazing buy. It was funny.
What's 15 vol? Is that the pricing?
So volatility, the way it's expressed in options is the 1 year standard deviation of the price. So what 50 vol means is that our best guess of Tesla's one standard deviation move over the next year is a 50% move in either direction.
50%, which is high, right? Which is a high volatility.
Yeah, that's a high vol. So the S&P 500 for the last 10 years has been around 13 vol. I might be off, Dan, by 1.5 points or something.
That's about right. Yeah, it's like it was like a 7% return with a 13 vol or something like that. It's kind of the
something in that area.
So how do you convert? So you take a 1 year leap option, you look at the price, and that's the vol.
Oh no, it's not easy to convert. Use a formula called Black-Scholes. People don't do that math themselves. Bloomberg will show you an implied volatility, as will a lot of websites. If you use Deribit to trade options, Deribit does it for you. They show you a price and they show you a vol. Professional traders run their own models, but the models are really close to each other. Like you're usually okay trusting the Bloomberg. Like again, for your purposes, the Bloomberg implied vol is fine.
What do you think about the vol formula for Bitcoin? Like, are you comfortable using that? Like, are you comfortable with the application of Black-Scholes to crypto as a class?
So what I use, and I'm not an options market maker in crypto. I don't have to be. Basically, I make bets when I think the vol's off by like 10, 20 points. So I'm not trying to really precisely model things. With that said, you get pretty close using what's called Black-Scholes had a really simple option model that did not include skew or kurtosis, which is pretty terrible. It was updated in like 1994 with the Corrado-Sue model. And I literally have a spreadsheet that is just the Black-Scholes Corrado-Sue model. So it lets you plug in kurtosis and skew. And I think that gets pretty close. Like I'm not assuming Bitcoin's normally distributed. I have a kurtosis of 5 in there. I have a little bit of skew. And I feel pretty comfortable. It seems to work pretty well. Like I think it pretty accurately reflects the Bitcoin curve.
Cool.
Yeah, this is a really common thing. Like simple Black-Scholes assumes a normal distribution, which means small moves are very likely, big moves are very unlikely. Yep. Bitcoin, really big moves are very likely. Sorry, I don't mean to be patronizing. I'm also talking just for everyone.
No, yeah, of course. I looked into it a while back. My background now is AI, and I wanted to see if there's an interesting way to try to model vol in Bitcoin itself or in crypto as a class. So.
You do have some good professionals in the space. The market makers at places like Pattern, at Genesis, they know what they're doing. They're ex-Wall Street. They're a lot more experienced with options than I am. But they're not setting the price. Like they're drawing the curve kind of, but then they're market makers. They're reacting to flow.
They're reacting to flow and then setting their own levels based on where they're getting hit.
Yeah, and then they're spreading, but like they don't want to have massive. So, but like Genesis Volatility is a great website it's actually amazing. It shows you the vol surface and kind of every basic way you'd want to see it. And Bitcoin vol often has like these weird bumps and looks kind of weird. And that's just partly because there's not that much capital devoted to market making it. And market makers would rather not have like crazy inventory at one strike, and they'll give up a vol point to kind of not have that. Right. Yeah, it's an interesting space that I think I'm pretty confident options in crypto will continue. It's been almost an exponential growth curve in terms of liquidity. I think maybe I'm just optimistic, but I think that'll continue.
We'll continue that
growth in options. So Matrixport, Bit.com recently launched their competitor to Deribit. CME options continue to pick up volume. So it's a growing landscape. Binance launched their options.
I've got to run. I just got a call. This has been a pleasure. Thanks so much for having me. Super fun. Would love to come back and chat with everybody again. So
see you, Brian. Take care, man.
Have a great night. Yep.
I'm gonna shut up now. I realize I've just been monologuing about options for a while.
So finish the topic.
No, that was it. You ask a geek about one of their interests. It's a danger.
I have a question. Why is it acceptable that there are so many forms of synthetic Bitcoin now? And why is HBTC on Curve Finance?
What do you mean? Why shouldn't there be that many forms?
What do you mean by acceptable?
Yeah.
No, like
the market behavior.
Why do we need wrapped Bitcoin, synthetics Bitcoin, Ren Bitcoin, Huobi Bitcoin, like 80 million Bitcoins? And the more that there are, the more afraid I get that what I'm getting definitely can't be for Bitcoin.
I think just because there's no, we're still in like network discovery mode. It's like in in 2017 when there were like 1,000 new exchanges, we didn't need 1,000 exchanges, but it's a competition, right? So wrapped Bitcoin is a profitable enterprise. You've got a bunch of people competing to develop network effects around it to build the wrapped Bitcoin solution. And maybe there'll be two. There might be a couple different or three. There might be a few different models, but so they're in competition now. And probably in a few years, you'll only have maybe three at most. And the reason I say three is like at least two models. You'd have centralized custodian and then non-custodial, or two models that I could see both kind of surviving. I don't know if there'd be a third.
I think a third would be community.
Feels like it makes Curve so unsafe.
Oh.
Damn.
You know?
All right, good bet.
Thank you.
Oof.
Wow, paid you off.
I got an ace once, just one.
I've had pocket aces 3 times tonight. Makes the price a lot easier.
I have not had a pocket pair above 7s.
Yeah, I'm running very hot.
I think you just need to be conscious to the underlying risks associated with wrapping the Bitcoin, right? Like if you're comfortable with BitGo, holding your Bitcoin and the reputation that they uphold, which is fantastic, that's great. It's kind of almost like trusting BlockFi for lending and borrowing versus a smart contract to an extent. But unfortunately, the decentralized solutions are pretty shit today. Like even Ren BTC is an example, which I think there's like $600 million worth of Bitcoin on Ethereum. I think Wrap Bitcoin has 70% of that. Another 20% is to Ren, and then like SBTC is like another small little chunk. But Ren BTC has majority of that held in one address, and that one address is in the control of the 5 founders of Ren. They've acted with high levels of integrity for the last few years, and I actually know the founder, and he's a really good guy, and all that type of stuff. But just inherently, that's the underlying risk, right? Like there's 9,000, 9,100, 9,200. I don't even know what the number is anymore. Bitcoin sitting in that wallet that Ren controls. So not to say we've seen this story play out before, but we've seen similar stories. But it just understanding that risk, and unfortunately, retail investors are not going to have the wherewithal to wrap their head around that. So it's just going to be a process of how these platforms and potential protocols want to solicit traders and.
I mean, you definitely are slow playing me. Some bullshit.
I actually have a show coming out about that next week, Chris.
I fold an 8 here. I got to do it, right? Shit.
What's your show?
Okay.
Oh, that was close. That was so close.
I owe you one.
Oh, that was so close.
Nice hand.
What's your show about?
I had someone on to talk about why people are basically the benefits, the pros of Wrap Bitcoin, and we look at we look at Wrap Bitcoin, we look at Ren Bitcoin, TBTC, and then I'm gonna also have a Bitcoiner on next week to look at risks as well. A little 2-part series.
Isn't synthetics Bitcoin just value represented, like the number of locked SUSD that you've minted from taking synthetics, and then you just, instead of SUSD, you turn it into SBTC, and it just represents the changing value, and like it disintegrates or something if your C ratio goes above something. I've never done it, but I feel like I should.
On synthetics?
Yeah, SBTC.
I'm not as familiar with SBTC solution, but there definitely is a 2 side to that market for sure.
Well, I'm pretty sure there's no real Bitcoin involved. I'm like 99% sure. Which is interesting.
Who do you having on to talk about those things?
Huh?
No, I was just asking Luke to talk about Wrap Bitcoin.
I already had David Hoffman on yesterday, and Monday I'm going to be speaking with Matt Odell.
Well, that's a good 1-2 punch, right? I'm sure Matt's going to be like, "Why the fuck would you ever wrap Bitcoin on Ethereum?" That's 100%.
Yeah, I'm trying. So I'm trying a new format. I really want to stay away from debates. I just don't find them too intellectually interesting, and like most people won't change their opinion on an asset, especially in like an hour-long podcast. So I want to start doing like almost a bull bear case of themes or trends, or in this case, like a specific asset, like tokenized Bitcoin, and then people can decide for themselves. Like obviously the maximalist is going to talk more about risk and downside and everything else, but someone from the ETH party to talk about, all the yield you can get and everything else. So yeah, I'm pretty excited about it. It'll be interesting.
Do I have 2 overcards here? Is that what's he doing? Am I getting odds with 2 overcards? This
almost
is such a terrible call.
You have 2 overcards, right? Or you said I had 2 overcards?
No, I have 2 overcards. That's it. And so with that, I don't even know if I'm getting odds with that.
Hold on.
I don't think I am.
You're putting in 300 to win.
400. There was something like 70 dead money.
What do you need, like 40% equity? 35. 380 to win.
It's close, and I don't know that I have those outs even.
Oh.
Well, that's still actually is probably the right fold because you have 9 outs there, Chris. Right? You had top and bottom.
Shouldn't have folded.
No, but then I have high card. Then I have more equity there.
Do you?
Because I folded high. Yeah, only king high, but I'm pretty sure that has more equity.
King high.
We're both drawing.
King high and then 6 outs.
Yeah.
He has 9.
When you're both drawing, unless he has a straight flush draw, I have more. I have more equity.
Yeah.
Oh,
So
mistake.
I'm interested to hear about that. Is I've been working in the Wrap Bitcoin ecosystem for 3 months. So
Oh yeah.
I come from a different perspective. I think, I've been a Bitcoin guy 7 years now. I love Bitcoin. I think Bitcoin is the best collateral and the soundest money ever invented, but it's underutilized on other networks, specifically in DeFi. And I think one of the problems with that is the immaturity in the trustless solutions that exist, because, retail is one thing, but like people like all of us sitting at the table, unless we have inherent trust in wrapping that Bitcoin, we're probably just going to keep it in Bitcoin and just have ETH or whatever else we'd want to leverage for the purpose of lending and borrowing. But I think there's a unique middle ground, and I mentioned it just a few minutes ago with Ari. It's this idea of like community custody, and it was something that was inspired by Vitalik a couple months ago. He did a simple tweet being like, the solutions in the market are so shit. I don't understand why there isn't like this massive community multi-sig that is responsible for custodying the Bitcoin and then having a minting mechanism. And I actually think that solution in particular is better than any solution that exists today. And with the right incentives for those that are signers on that multi-sig and participating, I think that can be much more powerful as an on-ramp for wrapping Bitcoin and much more trustworthy for the overarching community. So that's what I think.
I think that's an area where I think governance could work, because you're looking at a relatively small number of people, very like massive skin in the game, making a fairly simple decision. I think that is a good application of it.
Mm-hmm. So I'm going to be releasing some information the next week, but I'm essentially launching a DAO that's dedicated to bringing Bitcoin to DeFi. And the whole idea around the launch is we're going to make it as fair as humanly possible, taking the steps out of Wi-Fi's books here. But everyone's going to have the ability to create whatever products they want and pitch it to the DAO for approving it. And one of the products that I want to create is just that, the community multi-sig. And to your point, that's where governance comes into play, because the owners of the DAO token, and there's going to be a significant amount of those DAO tokens that are controlled by the community, you can incentivize people to be good actors, act timely, by rewarding them with what you have, which in turn is money, but is a token that represents some type of value. So that's where I've been deep in the rabbit hole.
That's next week, Chris.
Very cool.
Next week.
No, we got a week ahead of us, but we're gonna go public with everything over the next week. Yeah.
Is something I'm gonna be farming, Chris? Do I get a link to send out my wrapping? Then I get wrapped.
Farm it.
Yeah. So the whole way which I've just been fascinated the last 4 months with this launching mechanisms. The whole way we're launching is we're essentially gonna have a 21-day liquidity mine launch. We're gonna mine 50% of the supply in those 21 days. The other 50% is going to be in control of the DAO. The DAO is the only one with the keys to that supply, and then the DAO agent has the ability to change any parameters within the protocol. But that all goes to vote. So you can vote to tell the DAO agent, this is an Aragon DAO, to be able to actually make changes in the smart contract. But to answer your question, Jason, yes, there'll be a 21-day liquidity mining event for 50% of the supply, and that's how anybody can get access to the token. And there's obviously there's no one invested in anything. There's no pre-mine. We just funded it ourselves to build it.
No pre-mine?
Pardon?
Is there no pre-mine?
No.
When does this thing launch?
We're most likely going to launch it first week of October, but coming to the launch, it's not going to be this like, oh, it's launching today, like everyone jump in. Like, it's going to be weeks in advance. Everyone's going to know what the pools are. We paid to have everything audited before we're going live. All the code is open source, so you're going to have plenty of time to decide what you want to do with it and if you want to get involved.
You have a Discord link?
Not yet, no. We're going to go live with everything this weekend.
Send it to me when you do.
Sure.
I think if I call, Ari goes all in.
Wait, so where does the Bitcoin go?
Well, there is no inherent, like the product that I was talking about wanting to build is a product that the community will vote if they want to actually build that product. So that product doesn't exist. So there's going to be a DAO. This DAO has the ability to obviously bring the community together.
Are you keeping cab money?
No problem.
I love that play.
All right, Chris, I didn't mean to interrupt.
I just started laughing when I did it.
Yeah.
The min bet.
I literally thought you went all in.
That was a quick call.
Do I have a chance here?
It was a very quick call.
Pocket Kings.
What?
What?
Who?
I'm sorry, what did you just say?
Why?
Did I hear that right, or did I have it?
Are you guys doing the game? Like,
Jason, what
what's
the
going on?
fuck is going on here, dude?
Luke's rattled. Look, does he have it?
What the fuck?
All in.
Did you just
Yeah.
say that accidentally?
It sounded accidental to me. I'm not quite sure. I'm gonna keep quiet on this one. Ooh. Hmm.
Go ahead, outs.
Oh,
my
5, 6, 7,
God.
8. I actually thought you did there.
Wait, that's 4 times tonight, Luke.
Yeah, that is 4 times tonight. It makes
Holy
the
shit.
play very, very easy.
Yeah.
When everyone starts betting pre and I have aces, I'm like, all right, let's do it again. It's,
All right, well, that's my night.
Good chat, Nari.
Pleasure chatting,
Yeah, good
geeking
game.
out, and boring everyone with option Greeks.
no, I enjoy it. I
That's
enjoy
fun,
it.
man.
Next session, I will be prepared to monologue about lepidoptery.
Hold on, what's that? So I can read up.
That is the hobby of collecting moths, or butterflies. Butterflies or moths.
Have you lived in Vermont?
I am a failed lepidopterist. I've never been able to catch one, but I'm an aspiring lepidopterist someday.
I'll tell you what's interesting about that. That's funny because so I was at the cottage for 3 months during COVID, and on our beach we had milkweeds, and the milkweeds attracted the monarch butterflies. So me and my daughter would watch just that whole process, and the milkweeds grow, and then the large caterpillars go on there, and then they build their chrysalises on the chairs and different things that would hang, and then over 2 weeks they would hatch and they'd get the gold thing. It was just like an amazing thing to see. So I can appreciate where people could find passion in things like that, Artie.
All right. Pleasure, everyone. Good luck.
Later. Good game.
Hey, buddy.
Good night, man.
Hey, Gunny, do me a favor. I don't think you put any of your rebuys into the Zoom chat here. How many
I
times
did.
you?
1,000.
Sorry.
Oh, and yeah, I put it. It's up there. I didn't? I thought I did.
Maybe your settings. Oh no. Maybe your settings on private.
It is. I think I sent it. Shit. Sorry about that.
Or is it?
Jason, I was really hoping you had the ace king there. But for a second, I was like, damn, did he accidentally fucking say king king? Because I've done that before in a hand. Like I thought everyone folded. And
I actually thought you had king king, Jason.
I've
So
done
did
that
I.
before.
King, and you guys folded?
No, I was in a hand. I think it was with Chris and someone else. And I remember there was someone behind me to act. And I was like, fuck, I had the king there or something. And I felt horrible after I did it, but I said my hand.
Didn't stop you from pushing it, Luke.
I know. Well, I lost all my chips then.
That's why I was like, it's just gonna throw you up kilter.
I lost all my chips that hand, but I didn't mean to. But it was subtle enough that it sounded like you just kind of said it, like you were surprised. You're like, oh, I have king king. Here comes the third.
Well, wouldn't that have been lucky? If only the queen had come out.